seats and be comfortable. Kindly pay attention to these few house rules. 1. To access the restroom, kindly approach any of the protocol members to assist you. 2. We care about your safety, so we have health and safety personnel available to attend to you in case of need. Kindly talk to any of the protocol members for assistance. 3. In case of an emergency, do not panic. Calmly file out through the emergency exits and assemble at the emergency checkpoints. Enjoy. Ladies and gentlemen, a warm welcome to you all. Kindly take your seats and be comfortable. Kindly pay attention to these few house rules. 1. To access the restroom, kindly approach any of the protocol members to assist you. 2. We care about your safety, so we have health and safety personnel available to attend to you in case of need. Kindly talk to any of the protocol members for assistance. 3. In case of an emergency, do not panic. Calmly file out through the emergency exits and assemble at the emergency checkpoints. Enjoy. Ladies and gentlemen, a warm welcome to you all. Kindly take your seats and be comfortable. Kindly pay attention to these few house rules. 1. To access the restroom, kindly approach any of the protocol members to assist you. 2. We care about your safety, so we have health and safety personnel available to attend to you in case of need. Kindly talk to any of the protocol members for assistance. 3. In case of an emergency, do not panic. Calmly file out through the emergency exits and assemble at the emergency checkpoints. Enjoy. Ladies and gentlemen, a warm welcome to you all. Kindly take your seats and be comfortable. Kindly pay attention to these few house rules. 1. To access the restroom, kindly approach any of the protocol members to assist you. 2. We care about your safety, so we have health and safety personnel available to attend to you in case of need. Kindly talk to any of the protocol members for assistance. 3. In case of an emergency, do not panic. Calmly file out through the emergency exits and assemble at the emergency checkpoints. Enjoy. Ladies and gentlemen, a warm welcome to you all. Kindly take your seats and be comfortable. Kindly pay attention to these few house rules. 1. To access the restroom, kindly approach any of the protocol members to assist you. 2. We care about your safety, so we have health and safety personnel available to attend to you in case of need. Kindly talk to any of the protocol members for assistance. 3. In case of an emergency, do not panic. Calmly file out through the emergency exits and assemble at the emergency checkpoints. Enjoy. Ladies and gentlemen, a warm welcome to you all. Kindly take your seats and be comfortable. Kindly pay attention to these few house rules. 1. To access the restroom, kindly approach any of the protocol members to assist you. 2. We care about your safety, so we have health and safety personnel available to attend to you in case of need. Kindly talk to any of the protocol members for assistance. 3. In case of an emergency, do not panic. Calmly file out through the emergency exits and assemble at the emergency checkpoints. Enjoy. Ladies and gentlemen, a warm welcome to you all. Kindly take your seats and be comfortable. Kindly pay attention to these few house rules. 1. To access the restroom, kindly approach any of the protocol members to assist you. 2. We care about your safety, so we have health and safety personnel available to attend to you in case of need. Kindly talk to any of the protocol members for assistance. 3. In case of an emergency, do not panic. Calmly file out through the emergency exits and assemble at the emergency checkpoints. Enjoy. Ladies and gentlemen, a warm welcome to you all. Kindly take your seats and be comfortable. Kindly pay attention to these few house rules. 1. To access the restroom, kindly approach any of the protocol members to assist you. 2. We care about your safety, so we have health and safety personnel available to attend to you in case of need. Kindly talk to any of the protocol members for assistance. 3. In case of an emergency, do not panic. Calmly file out through the emergency exits and assemble at the emergency checkpoints. Enjoy. Ladies and gentlemen, a warm welcome to you all. Kindly take your seats and be comfortable. Kindly pay attention to these few house rules. 1. To access the restroom, kindly approach any of the protocol members to assist you. 2. We care about your safety, so we have health and safety personnel available to attend to you in case of need. kindly talk to any of the protocol members for assistance. 3. In case of an emergency, do not panic. Calmly file out through the emergency exits and assemble at the emergency checkpoint. Enjoy. Ladies and gentlemen, a warm welcome to you all. Kindly take your seats and be comfortable. Kindly pay attention to these few house rules. 1. To access the restroom, kindly approach any of the protocol members to assist you. 2. We care about your safety, so we have health and safety personnel available to attend to you in case of need. Kindly talk to any of the protocol members for assistance. 3. In case of an emergency, do not panic. Calmly file out through the emergency exits and assemble at the emergency checkpoint. Enjoy. Ladies and gentlemen, a warm welcome to you all. Kindly take your seats and be comfortable. Kindly pay attention to these few house rules. 1. To access the restroom, kindly approach any of the protocol members to assist you. 2. We care about your safety, so we have health and safety personnel available to attend to you in case of need. Kindly talk to any of the protocol members for assistance. 3. In case of an emergency, do not panic. Calmly file out through the emergency exits and assemble at the emergency checkpoint. Enjoy. Ladies and gentlemen, a warm welcome to you all. Kindly take your seats and be comfortable. Kindly pay attention to these few house rules. 1. To access the restroom, kindly approach any of the protocol members to assist you. 2. We care about your safety, so we have health and safety personnel available to attend to you in case of need. Kindly talk to any of the protocol members for assistance. 3. In case of an emergency, do not panic. Calmly file out through the emergency exits and assemble at the emergency checkpoint. Enjoy. Ladies and gentlemen, a warm welcome to you all. Kindly take your seats and be comfortable. Kindly pay attention to these few house rules. 1. To access the restroom, kindly approach any of the protocol members to assist you. 2. We care about your safety, so we have health and safety personnel available to attend to you in case of need. Kindly talk to any of the protocol members for assistance. 3. In case of an emergency, do not panic. Calmly file out through the emergency exits and assemble at the emergency checkpoint. Enjoy. Ladies and gentlemen, a warm welcome to you all. Kindly take your seats and be comfortable. Kindly pay attention to these few house rules. 1. To access the restroom, kindly approach any of the protocol members to assist you. 2. We care about your safety, so we have health and safety personnel available to attend to you in case of need. Kindly talk to any of the protocol members for assistance. 3. In case of an emergency, do not panic. Calmly file out through the emergency exits and assemble at the emergency checkpoint. Enjoy. Ladies and gentlemen, a warm welcome to you all. Kindly take your seats and be comfortable. Kindly pay attention to these few house rules. 1. To access the restroom, kindly approach any of the protocol members to assist you. 2. We care about your safety, so we have health and safety personnel available to attend to you in case of need. Kindly talk to any of the protocol members for assistance. 3. In case of an emergency, do not panic. Calmly file out through the emergency exits and assemble at the emergency checkpoint. Enjoy. Ladies and gentlemen, a warm welcome to you all. Kindly take your seats and be comfortable. Kindly pay attention to these few house rules. 1. To access the restroom, kindly approach any of the protocol members to assist you. 2. We care about your safety, so we have health and safety personnel available to attend to you in case of need. Kindly talk to any of the protocol members for assistance. 3. In case of an emergency, do not panic. Calmly file out through the emergency exits and assemble at the emergency checkpoint. Enjoy. Ladies and gentlemen, a warm welcome to you all. Kindly take your seats and be comfortable. Kindly pay attention to these few house rules. 1. To access the restroom, kindly approach any of the protocol members to assist you. 2. We care about your safety, so we have health and safety personnel available to attend to you in case of need. Kindly talk to any of the protocol members for assistance. 3. In case of an emergency, do not panic. Calmly file out through the emergency exits and assemble at the emergency checkpoint. Enjoy. Ladies and gentlemen, a warm welcome to you all. Kindly take your seats and be comfortable. Kindly kindly pay attention to these few house rules. 1. To access the restroom, kindly approach any of the protocol members to assist you. 2. We care about your safety, so we have health and safety personnel available to attend to you in case of need. Kindly talk to any of the protocol members for assistance. 3. In case of an emergency, do not panic. Calmly file out through the emergency exits and assemble at the emergency checkpoint. Enjoy. Ladies and gentlemen, a warm welcome to you all. Kindly take your seats and be comfortable. Kindly pay attention to these few house rules. 1. To access the restroom, kindly approach any of the protocol members to assist you. 2. We care about your safety, so we have health and safety personnel available to attend to you in case of need. Kindly talk to any of the protocol members for assistance. 3. In case of an emergency, do not panic. Calmly file out through the emergency exits and assemble at the emergency checkpoint. Enjoy. Ladies and gentlemen, a warm welcome to you all. Kindly take your seats and be comfortable. Kindly pay attention to these few house rules. 1. To access the restroom, kindly approach any of the protocol members to assist you. 2. We care about your safety, so we have health and safety personnel available to attend to you in case of need. Kindly talk to any of the protocol members for assistance. 3. In case of an emergency, do not panic. Calmly file out through the emergency exits and assemble at the emergency checkpoint. Enjoy. Ladies and gentlemen, gentlemen, a warm welcome to you all. Kindly take your seats and be comfortable. Kindly pay attention to these few house rules. 1. To access the restroom, kindly approach any of the protocol members to assist you. 2. We care about your safety, so we have health and safety personnel available to attend to you in case of need. Kindly talk to any of the protocol members for assistance. 3. In case of an emergency, do not panic. Calmly file out through the emergency exits and assemble at the emergency checkpoint. Enjoy. Ladies and gentlemen, a warm welcome to you all. Kindly take your seats and be comfortable. Kindly pay attention to these few house rules. 1. To access the restroom, kindly approach any of the protocol members to assist you. 2. We care about your safety, so we have health and safety personnel available to attend to you in case of need. Kindly talk to any of the protocol members for
I'm honored to address you in this maiden 3R Africa Summit, an event that has brought together leaders, policymakers, regulators, innovators, change makers across Africa, providing an essential platform for fostering collaboration, driving innovation, and building momentum to transform our continent.
Accra is the ideal venue for these critical discussions as Ghana continues to demonstrate an exemplary commitment to driving technological progress and meaningful investment and engagement.
I want to thank all of you very much for the opportunity to share with you what our heads of states have instructed me to do. which is to implement the protocol on digital trade, to create opportunities for millions and millions and millions of young Africans, to place small medium enterprises at the center of Africa's economy, and to catapult our continent to global competitiveness.
We have the power to transform not just our economies, but the world. Let us lead with vision, act with courage, and remain united in our pursuit of a fintech future that truly serves all of humanity.
I believe that together we can shape an Africa that not only thrives in the digital age, but also serves as a shining example to the world of inclusive and sustainable development.
It's important to me to be here to really make some connections and understand what everybody's looking for, and hopefully make some good networks so we can push our business agenda forward.
My experience so far has been phenomenal. There's been a lot of information, a wealth of knowledge, experience, and one of the big takeouts I'm getting out of here is the solution for Africa lies in Africa. It's really about how we collaborate, how we innovate, how we leverage each other's strengths from various portions, whether you're from a bank, from a telco, or from a regulator perspective, and harness all of that to provide solutions for Africa's people.
It's been great. I had the opportunity to meet with some of the great people in the tech industry, and we have some fintech companies using the great technologies like the AI, the blockchain, and other machines to see the infusion and how to solve most of these problems.
I find it very interesting because I'm always very excited about Africa and all the, everything that's happening and the activities in terms of ensuring that we're creating an inclusive community for everyone that's here. And so what I really liked was the speeches that were given and that were talking about how we can actually use the systems that we have here to create this financial inclusion.
Innovation, investment, and impact. These are very critical for driving the needed capital to drive investment into the technology sector in Africa. The opportunity is massive. These conversations and the time we are having them are timely, and it's important that we advance this and make sure that we get to make an impact as part of the initiative for this year's session.
I feel there is so much potential in Africa today. Africa is the next best thing to happen to the world.
It's important to me to be here to really make some connections and understand what everybody's looking for, and hopefully make some good networks so we can push our business agenda forward.
My experience so far has been phenomenal. There's been a lot of information, a wealth of knowledge, experience, and one of the big takeouts I'm getting out of here is the solution for Africa lies in Africa. It's really about how we collaborate, how we innovate, how we leverage each other's strengths from various portions, whether you're from a bank, from a telco, or from a regulator perspective, and harness all of that to provide solutions for Africa's people.
It's been great. I had the opportunity to meet with some of the great people in the tech industry, and we have some fintech companies using the great technologies like the AI, the blockchain, and other machines to see the infusion and how to solve most of these problems.
I find it very interesting because I'm always very excited about Africa and all the, everything that's happening and the activities in terms of ensuring that we're creating an inclusive community for everyone that's here. And so what I really liked was the speeches that were given and that were talking about how we can actually use the systems that we have here to create this financial inclusion.
Innovation, investment, and impact. These are very critical for driving the needed capital to drive investment into the technology sector in Africa. The opportunity is massive. These conversations and the time we are having them are timely, and it's important that we advance this and make sure that we get to make an impact as part of the initiative for this year's session.
I feel there is so much.
We ask for the peace and blessings of God Almighty to be our portion as we deliberate from now until its successful end. Amen. Please be seated.
In 2024, over 7,500 stakeholders gathered in Accra to ignite Africa's digital future. Today, 3i Africa returns as a focused policy forum under the theme One Africa, One Market, a strategic gathering intended to drive innovation, investment, and impact for a connected future. Welcome to 3i Africa Policy Forum 2025.
With some good news, shall we? Rwanda is recognized as a leader in digital transformation in Africa, with significant investment in technology to drive economic growth and improve service delivery. Take, for example, the building of the Kigali Innovation City, a tech hub aiming to be Africa's next big startup ecosystem. But let's talk about South Africa. It is leading the continent in AI and fintech, the government and e-government and skills development with startups like Jumo and Yoko, shaping the future of digital payments. Kenya is a beautiful story, pioneering M-Pesa, the world's most successful mobile money platform, transforming digital banking and propelling her to a top-tier performer on the GSMA's Digital Africa Index. Nigeria is Africa's largest tech hub, with Lagos, the Yaba district, known as Africa's Silicon Valley, churning out world-class fintech and e-commerce solution providers like Paystack, Flutterwave, etc. Ghana, on the other hand, has the government with the private sector making significant strides in digital transformation while providing leading tech incubators supporting startups across the continent. What do all these milestones point to? They point to one Africa, one market, driving innovation, investment, and impact for a connected future. Welcome to the 3i Africa Policy Forum. Put your hands together. You've made it thus far. My name is Jerry Ajololo, and on behalf of the Governor of the Bank of Ghana, acting through the Office of FinTech and Innovation, I'd like to say a very good morning to you all and to thank you for attending to our call to be part of the second edition of the 3i Africa Policy Forum. We meet here at a time when Africa is on the horizon of unleashing her digital and economic potential. Amongst us are great resources who will be helping us to explore this vital theme, which for me is both foundational and at the same time critical to the pursuit of our continent, encapsulating our ambition of becoming one single market. In the course of today's program, we shall have introductory remarks from the Governor, which will culminate in a keynote and thereafter a presentation which will lead us to our first panel for today. Thereafter, we shall break for coffee and tea, and we'll be back to conclude with two fascinating panel discussions. We're live on Facebook, and so for all those who are here, you might want to tell your friends to plug in and enjoy this rich conversation we're going to have on One Africa, One Market, driving innovation, investment, and impact for a connected future. Here to set the tone for today's engagement is the Governor of the Bank of Ghana. Would you please make welcome Dr. Johnson Esiama.
Good morning. Good morning. Good. So, good morning, everyone. Your good morning is a bit weak. Good morning. Good morning. Yes, welcome to Accra. Your Excellencies, Honorable Ministers, Central Bank Governors, and sorry about that. My reading glasses, but we can do without it. Distinguished guests, esteemed colleagues, and friends from across Africa and beyond. Let me welcome you to the 3I Africa Policy Forum here in Accra. It is a distinct honor to open today's proceedings under the timely and compelling theme. The theme is One Africa, One Market, Driving Innovation, Investment, and Impact for a Connected Future. This theme speaks to more than just aspiration. It defines a strategic imperative. It calls us to envision Africa not as a patchwork of disconnected economies, but as a single dynamic economic bloc that is powered by innovation, that is enabled by investment, and committed to inclusive and sustainable development. Realizing this vision, ladies and gentlemen, requires it requires coordinated action across public and private sectors, and grounded in policy foresight and a willingness to embrace transformative technologies. Today's forum builds on the momentum generated at the 3I Africa Summit held here last year in May, and it convenes the very leaders in policy, leaders in regulation, leaders in finance, and leaders in technology who are shaping Africa's digital transformation. Our purpose is not merely to reflect on that summit's outcomes, but to translate them into clear, executable strategies. The focus is implementation, and that is scaling fintechs, digital assets, and cross-border payment solutions to deepen financial inclusion and intra-African trade in alignment with the AfTA. Across the continent, the signs of progress are encouraging. Fintech is breaching access gaps, particularly for underserved and remote communities. Cross-border digital payments are gaining traction, promising to ease trade frictions and accelerate regional commerce. Regulatory sandboxes and innovation hubs are taking root, offering safe environments to test new technologies within the realities of our African context. These gains, ladies and gentlemen, are being reinforced by modern regulatory approaches, by pilot programs, by innovation offices, and digital public infrastructure frameworks that are all designed to promote inclusive finance, enhance SME participation, and unleash the creativity of Africa's youth and entrepreneurs. But as promising as these national initiatives are, they are not enough. And to fully realize the vision of One Africa, One Market, we must scale our efforts through continental coordination. This means, ladies and gentlemen, harmonizing regulatory frameworks, fostering interoperability across financial infrastructures, and building trust. and transparency across jurisdictions. And I must emphasize that no single institution, no matter how well resourced, can drive this transformation alone. This forum, therefore, represents a unique opportunity to build this shared momentum. The sessions ahead will address key levers for driving Africa's digital financial integration. And let me specify a few. For example, attracting sustainable investment into fintech and digital finance. Secondly, aligning regulatory approaches to unlock cross-border payments. Thirdly, empowering SMEs as drivers of regional trade and innovation. Next is operationalizing the digital trade protocol to support regulatory convergence. And then ensuring responsible and secure adoption of stable coins and digital assets. And finally, unlocking investor capital through strategic de-risking frameworks. The aim in all this is not just dialogue, but deliverables. And that is actionable steps that move us from intention to execution. Here at the Bank of Ghana, we remain firmly committed to this agenda. Our work, for example, with the Pan-African Payment and Settlement System, or the PAPS, and more recently, our bilateral fintech passporting collaboration with the National Bank of Rwanda. This reflects our conviction that regional integration is achievable, and it's achievable trust-based partnerships. We are also proud at the Bank of Ghana to announce our collaboration with the National Bank of Rwanda and the Global Financial Technology Network of Singapore. And this is on the initiative called the Next Gen Digital Payment Infrastructure Project, or the DPI for short. This initiative aims to modernize Africa's cross-border payments ecosystem through a central bank-led, innovation-enabled approach, co-developed with fintechs and financial institutions. The project will support scalable pilots that can serve as templates across the continent, accelerating interoperability and unlocking the full potential of Africa's digital economy. As we begin today's dialogue, ladies and gentlemen, I urge us to be ambitious, pragmatic, and united in purpose. We need to focus not only on what is possible, but on what is essential, and commit to building a connected African financial ecosystem by the year 2030. Let this forum be a turning point where vision meets action, where policy enables innovation, and where Africa steps confidently into the role as a digital financial powerhouse. I want to thank you once again for joining us in Accra, and I look forward to the rich discussions, the impactful partnerships, and the concrete outcomes that will emerge from our time together. I thank you for your attention.
One more time, the Governor of the Bank of Ghana. We thank you for that warm note of welcome, calling us to ambition, pragmatism, and unity of purpose. If I heard you clearly, Honorable Governor, during your acceptance speech at the Jubilee House, you promised, amongst other things, concerning fostering innovation and payment ecosystems, to, amongst many others, continue to support initiatives that expand access to financial services, leveraging fintech and mobile banking solutions to broaden the scope, access, and opportunities, especially in underserved communities. Your presence here and your remarks certainly lend credence to that. Please, a round of applause. And so I feel the room is a little cold. Am I the only one? Are you okay? You don't seem okay. Let's warm up a little bit. Please rise with me, everybody, please. Let's do something to warm up a little bit. If you have your phones here, please turn your phones on. We've designed a very unique app for today. It's a black box with a hole in the middle. It's your camera, please. Just turn it on yourself. And I want us to commit to doing something unique at this platform, on this platform. Are we ready? So please capture yourself in a video and say these after me. Are we ready? I promise to network with at least 10 new people and to collect enough business cards to build an army to unlock Africa's digital innovation. I pledge to ask at least one smart question during the Q&A session and to pretend I knew the answer all along. I vow to use this forum's Wi-Fi to connect with fellow attendees and not to generate AI responses to assignments from my boss. I promise to eat all the free food, drink all the coffee, and still manage to stay awake during every presentation. Finally, I vow to add value to this forum because the future of Africa's connected future lies with me. Put your hands together for yourselves, and please be seated. Please share the video on all social media platforms. And if we don't achieve our ambition today, please, it's on you. In moving on, we would like to take a keynote address. Before that, however, there are numerous opportunities that are presented by digital adoption in Africa. By 2035, for example, Africa shall require at least 400 new data centers for generation, processing, management, and commercialization of Africa's data on the continent. It creates an opportunity for one important thing: investment. In moving on, we would like to explore how we can create an enabling atmosphere for investment in Africa. We're particularly thrilled about the one to deliver this keynote because for the past 30 years, his has been a labor of love working with the International Monetary Fund as the director or chief director in strategy, policy and review department, also as director of IMF's Regional Technical Assistance Center for Southern Africa, but currently as the deputy director in the African department of the International Monetary Fund. It is my hope that you will explore how Africa can attract and sustain investment in fintech and digital finance through regulatory innovation, market stability, and maybe strategic partnerships. With joy in your heart, I give to you Mr. Vitaly Kramarenko.
It's so nice to make this presentation after, the warm-up, and I think the spirits are really up here in the audience, and people are smiling. It's a great atmosphere, and thanks a lot for the invitation. Dear Mr. Governor, ladies and gentlemen, distinguished participants of the 3i Africa Summit 2025 Policy Forum. It's an honor to address this esteemed gathering at the 3i event, where we convene to explore the intersection of innovation, investment and inclusion across Africa. This forum provides a unique platform to discuss transformative ideas that will shape the future of sub-Saharan Africa and brings together an impressive set of speakers from all over the world who can offer unique and deeply insightful perspectives. I will start by outlining the macroeconomic context in sub-Saharan Africa. A hard-won post-COVID recovery has been weakened by recent external events. In fact, last year saw significant progress. Growth picked up to 4%, and macroeconomic imbalances narrowed, including a deceleration in inflation on average to 4.5%, and the stabilization of public debt below 60% of GDP on average on the continent. However, growth is expected to decelerate in 2025, reflecting low external demand, subdued commodity prices, and tighter financial conditions. In this context, countries will need to increasingly rely on their internal sources of development, including through further progress in fiscal reforms and, more importantly, structural transformation, promoting a growing role of private sector investment. Indeed, the private sector could and should do much more heavy lifting than it's doing right now. To achieve this, policymakers should focus on development of supporting infrastructure, digital finance innovation, and regional trade facilitation, among other priorities. I'm turning to infrastructure issues. Creative solutions, including private-public partnerships, are needed to continue to make further progress in digital infrastructure development. And this infrastructure is crucially needed for further advances in digitalization. I will give you a couple of numbers. Only half of the population in sub-Saharan Africa has access to electricity, and it's essential to increase electricity access. The internet penetration is estimated at about 33% in sub-Saharan Africa, and again here, more progress is needed. In terms of mobile money and mobile penetration, the numbers are much stronger. The aggregate penetration of cellular subscription has increased rapidly since 2000, reaching about 80 subscriptions per 100 people in sub-Saharan Africa. It's much higher than the low-income average of 60 subscriptions, according to the World Bank. Also, despite falling behind other countries in traditional access to finance, proxied by the number of commercial bank accounts per adult, the region is ahead in mobile financial access, like usage of mobile money accounts. But again, despite making huge progress in mobile penetration, more could be done as well. Turning to digital innovation. Digital innovation in the financial sector is a multifaceted process. Our recent research and capacity development efforts focused on digital payments as a gateway to financial innovation and leapfrogging legacy systems. We created a network of sub-Saharan central banks on digital payments, and we work closely with this network. We conducted a survey of sub-Saharan central banks that produced 3 important messages. First, financial inclusion and lower transaction costs, in particular for remittances and trade, are the key motivating factors for rapid progress in digital payments, according to policymakers in sub-Saharan Africa. Second, the role of private sector solutions is crucial in the context of robust regulation. And third, implementation of central bank digital currencies requires further exploration and research. Drawing on international experience in our interactions with central banks, we are also about to publish a comprehensive paper on digital payments innovations in sub-Saharan Africa. It explores the dynamic landscape of digital payments, focusing on central bank digital currencies, fast payment systems, private mobile money, and crypto assets. It highlights the transformative potential of digital innovations while emphasizing the need for strategic planning and robust regulatory frameworks. Given the region's unique challenges, the paper highlights the importance of establishing robust infrastructure, training personnel, promoting digital payment literacy, and developing interoperability. Governments can play an important role in providing essential payment infrastructure and sound policy frameworks to mitigate risks, build resilience, and harness the benefits of digital payments. Now I'm turning to trade. Trade integration is a major potential source of growth on the continent, and it can be facilitated by digital financial development, especially with respect to cross-border transactions. We published a paper about trade integration in Africa. It estimates that by reducing tariffs and non-tariff barriers, along with enhancing trade infrastructure, financial development, and cross-border payment frameworks, intra-African trade could see a substantial growth. For example, a 90% reduction in tariffs and a 50% cut in non-tariff measures, if accompanied by all these complementary measures that I just mentioned, could increase trade flow between African countries by 53%, and with the rest of the world by 15%, and raise real GDP per capita permanently by more than 10%, potentially lifting 30 to 50 million people out of extreme poverty. This is the impact of promoting regional integration, and of course the cross-border payments could play a huge role in lifting so many people out of extreme poverty. Today's session on cross-border payments in interoperability under Pillar 1, SME trade enhancement and investment connectivity under Pillar 2, and public infrastructure in digital assets under Pillar 3 present an excellent opportunity for brainstorming about interconnected topics of building the necessary public infrastructure, fostering interoperable digital innovations, harmonizing digital payment regulations, facilitating regional trade, improving the business climate, and promoting access of SME to finance through digital innovation. As we engage in discussions over the course of this forum, it is imperative that we focus on collaboration across sectors and borders. The challenges and opportunities require a coordinated approach from central banks, financial institutions, policymakers, and the private sector. Together, we can create an environment that fosters innovation while safeguarding economic resilience and stability. And in this context, let me return to my initial message about the importance for the private sector to do more heavy lifting. One Africa, one market is the ultimate solution to maximize the benefits of the private sector-led development. Let me also indicate that the IMF will continue to support sub-Saharan African countries to drive innovation, investment, and impact for a connected future in the context of a stable macroeconomic environment. Thank you for your dedication and commitment to this cause. I look forward to the fruitful exchanges and insights that will emerge from our collective efforts at the 3I Africa Policy Forum. Thank you very much.
We're grateful to you, Mr. Vitaly Kramarenko, Deputy Director in the African Department of the IMF, for that very insightful keynote on creating an enabling environment for investment in Africa. He leaves us with a consideration concerning interoperability, regulatory alignment to support cross-border payments, for which reason we're joined by the GSMA, a global organization unifying the mobile ecosystem to discover, develop, and deliver innovation foundational to positive business environments and societal change. Here to make a presentation to feed into Mr. Vitaly's keynote is the GSMA Senior Regulatory Specialist for Mobile Money. He will be walking us through connecting Africa, cross-border payments, and the power of policy alignment. Would you please make welcome Mr. Karim Dia.
Thank you. Good morning, Honorable Governor Dr. Asiama, distinguished governors, ministers, policymakers, regulators, and participants. If I may go to the first slide. First, a quick pulse check from GSMA's newly released State of the Industry Report on Mobile Money 2025. So globally, the industry closed 2024 with 2.1 billion registered mobile money accounts and processed 108 billion transactions worth $1.68 trillion over the year. Sub-Saharan Africa alone accounts for about 1.1 billion of those accounts and $1.1 trillion in transaction value, roughly 53% of global accounts and 2/3 of global transaction value. To put that in perspective, the region handled the equivalent of $3 million every minute through mobile money systems in 2024. The message is clear. Mobile money is not only Africa's dominant retail payments rail, it is already the backbone for cross-border remittances and growing intra-Africa trade. Our GSMA 2024 cost survey across 178 corridors shows why. The average mobile money remittance now costs 3.54%, 2.5 percentage points cheaper than all other channels tracked by the World Bank. On the SDG 10.C benchmark, which is bringing a US $200 transfer below 3%, mobile money is already within striking distance. So the technology is working. What's missing is seamless cross-border connectivity. Here is where we stand today. 32 African countries have domestic wallet-to-wallet or wallet-to-bank interoperability. 12 now support live cross-border mobile money corridors. But the average fee of $50 transfer still hovers around 7%. If we can push that down to 3%, Africa could unlock $40 billion remittance dividend every year, money that flows straight into households and MSMEs. What is preventing us from reaching that target? First, regulatory fragmentation. 40+ license categories, all with different KYC and foreign exchange rules. Second, limited switch-to-switch connectivity. National ACHs and mobile platforms often use incompatible APIs. Third, high total user cost, extra compliance checkpoints, bilateral settlement that add a markup. And fourth, infrastructure gaps, from universal digital ID to rural connectivity and onshore foreign exchange liquidity. If we take the example of Ghana, Ghana shows what happens when policy tackles those pain points head-on. Ranked #1 in the GSMA Mobile Money Regulatory Index 2024, the Bank of Ghana introduced risk-based KYC tiers, mandated open access to the GIPS instant payment switch, and enforced a robust consumer protection code. Between 2018 and 2024, the average domestic transfer fee fell 82%, and Ghana launched Africa's first multi-currency wallet pilot. Clear, proportionate rules, plus inclusive rails drive scale, affordability, and trust. Outside Africa, we are already seeing models we can adopt. BIS Project Nexus is creating a common API layer to link real-time payment systems across Asia. Project Mbridge shows that multi-CBDC settlement can cut FX costs in half. The UPI Pay Now linkage between India and Singapore clears retail transfers in under 60 seconds and at roughly 3%. Closer to home, PAPS is piloting local currency net settlement between WEMU, Ghana, and Nigeria. Africa can leapfrog by launching a Pan-African interoperability sandbox that imports these design patterns from day one. GSMA 5-point policy playbook From our research, 5 levers consistently open the door to affordable cross-border payments. The first one, license and supervision harmonization, mutual recognition within the RECs. The second one, open, cost-based switch access, publish standard APIs so non-banks can connect. The third, tiered digital ID-enabled KYC, including refugee and diaspora IDs. The fourth one, transparent FX and pricing rules. Real-time spread disclosure, caps on unwarranted fees. And the fifth one, participatory RegTech sandboxes. Regulators and industry testing AML CFT solutions together in real time. GSMA backs this with our regulatory index, certification program, and hands-on RegTech clinics. Roadmap to 2030. Here is a realistic 3-phase roadmap aligned with the G20 cross-border payment targets. 2025-26, publish REC-level rulebooks, connect PAPs with at least 10 instant payment systems. 2026-28, launch an Africa Nexus multi-rail hub, introduce joint supervisory APIs. 2018-30, reach 80% corridor coverage with real-time rails priced at or below 3%, enabling 100 million more adults and 40% of MSME trade to move money digitally across borders. Call to action for multilaterals and regulators. To get there, we need catalytic support. IMF, co-chair a working group on FX and capital control harmonization under the AFCFTA. World Bank, expand PSD4 funding to connect 10 payment switches directly to PAPs. BIS hosts the Africa Interoperability Sandbox, leveraging Project Nexus, Mbridge, and Dunbar. African central banks and providers share harmonized corridor data so regulations stay evidence-based and proportionate. Together, we can slash FX spreads to a third and give 100 million more Africans low-cost cross-border access by 2027. So, seed questions for Q&A. To start our dialogue, let me leave 3 quick questions on the table. The first one, which corridor could become Africa's first multi-country Nexus-style payment hub? The second question, how do we balance open switch access with settlement risk safeguards? And the third one, what incentives, carrots or sticks, will persuade providers to contribute data to a Pan-African sandbox? Thank you for your attention. You can download the State of an Industry Report 2025 and the Mobile Money Regulatory Index from the GSMA.com website. Thank you.
One more time, ladies and gentlemen, a round of applause. We thank you very much, Mr. Karim Dia, GSMA Senior Regulatory Specialist for Mobile Money. And for those 3 questions you've bequeathed to us, well, let me invite the following to please take their place and answer those hard questions. Please welcome the moderator, Matteo Rizzi, founder, Time Pledge. A round of applause as he comes on stage. Joining Matteo is the Senior Principal and Manager, Financial Innovation, National Bank of Rwanda, Ms. Ingrid Siyuzuzo. of this forum, the 3I Africa Policy Forum. For all our members outside, you may please join us with your tea or coffee. It is tax exempt. As a prelude to our next session, ladies and gentlemen, let's give you the power of our creative force. I give you Yom Mfojo on guitar.
Hi. A very good afternoon to you, ladies and gentlemen. My name is Yom Mfojo. I will be sharing some poetry with you, and I'm very, very pleased to be here. Thank you. I'm joined by the excellent strumming of Kuti. Okay. From the shuffle of busy feet along the Osu RE in Ghana's Accra, to the timeless tick-tock of Cape Town's big clock, within the fast-paced high stakes of Lagos city center, till we enter the high-rise of Johannesburg. Between the nooks and crannies, alleys of Silicon Valley, all over the continent from Gobi to Nairobi. Nations are being built or strengthen their standings, standing in the knowledge of a digital upheaval. The principle is simple. We have advanced as a people. We held on to the reins and steered ourselves through a self-sustaining revolution till we find ourselves custodians, heralds of an era of digital solutions. It must be stated, if it's not already known, that the underlying factor, the main actor through which Africa has grown, rests on the shoulders of our own innovation. In Africa's glow where markets hum, fintech speaks in clicks, not drums. Africa they shine, markets they buzz. The art of trade is redefined. Mobile wallets, cashless minds, no more queues in crowded halls. Now payments dance through protocol calls. It be clicks and apps they get things done. You go fit send Momo just like a breeze. No long talk, no need to please. From Marrakesh to Mogadishu, from Monrovia to Maputo side, it be tech we now they guide. From bustling streets to northern skies, innovation starts to digitize. In the heart of gold where cocoa flows, a digital rhythm slowly grows. Through artful code and mobile streams, Africa dreams and fintech dreams. From Dar es Salaam's pulse to Ouagadougou's call, money moves without a stall. Between conglomerates and among your mates, we are immersed in a dance of commerce at honest rates. We look neither east nor west. Africa looks within, for this is where our progress rests. Bright minds craft a future bold, with apps more precious than bars of gold. QR codes, soft loans on screen, tech that serves the in-between. In local tongues the systems speak, supporting strong, empowering weak. A land once bound by paper chains now moves with code through broadband lanes. Silicon minds and savvy youth, chasing speed, efficiency, truth. The song of Africa surely will be sung, with wallets wide on data's lungs. We trade, we save, we lift, we build. A cashless hope, a dream fulfilled. Sharp minds, they code like fire. Then they build tools where all men admire. Then beef up security to weed out impurities. With pins and prints, we pin down impunity. Two-factor verification, public education. Fintech in Africa stands for every vocation. From market stops to cultivators of crops, you don't need bank to open shop. No be only big man we got choice. No need to shout at the top of your voice. We the hustle, we the plan, make them easy. Yes, we can. Cancel the primitive with tech that's intuitive. Leading the way as we march to conquer practices punitive. We the strive, we the plan. Make we thrive. Yes, we can. But still the road is steep and wide, with gaps in access we can't hide. The challenge calls for hands to lift, to bridge the tech and close the rift. Through shared design and digital schools, we turn the tide and change the rules. Africa can and Africa will build a future smart and still. Though gaps remain as signals fade, uneven roads that time has laid, if we teach, include, embrace, no soul is lost in fintech's race. Together rising hand in hand, a smarter, freer future planned. I stand before you brimming with confidence in the faces I see. A caucus of co-authors scripting an African future, sewing together these crafts with the precision of a surgeon's sutures. I implore you all to remain dedicated, diligent, and alert, as I leave you with the knowledge that the organizers of this event just sent me my bank alert. Long live FinTech in Africa. Thank you very much.
Put your hands together for the one, the only Yom and Fojo. And through digital platforms, Africa and Africans have exposed the world to their creativity, innovation, but much more than that, their ingenuity. Talk of music and the arts in general, and we're forced to reckon with. But the story gets even more exciting because, guess what? Africa's digital economy contributes significantly to our GDP. Let me give you these stats. According to the IMF, Africa's digital economy contributed specifically to our GDP 180 billion, amounting to 5.2 of the entire GDP in 2025, and is estimated by 2030 to reach over 712 billion, accounting for 8.5% of Africa's combined GDP. This leaves us with a very interesting question we need to answer. Ladies and gentlemen, how can we power all this prosperity without scaling SMEs through regional trade? And so to walk us through how we can enable African SMEs participate in regional trade through fintech, policy tools, and financing models, it's my pleasure to welcome our esteemed panel, who for 30 minutes will walk us through this very amazing conversation. Make welcome the moderator, the head public policy GFTN, Madam Radhika Singh. She's joined in conversation with the group head, Agency Banking, Ecobank Transnational Incorporated, Madam Jacqueline Mpare. Together with the CEO of Asa Savings, Mohammed. I'll need some Arabic coffee for that. Aurangzeb. Please, a round of applause. Would you be kind to educate me? Aurangzeb, please, a round of applause. Madam Moderator, 30 minutes is yours, and then 10 minutes for the audience. Over to you.
All right, thank you very much. So as our moderator has said, today we are actually having a fireside chat on unlocking SME growth in Africa. And as we all know, SMEs are the backbone of the African economies, powering job creation, facilitating innovation, and improving livelihoods. Yet many challenges persist, from access to finance, a lack of infrastructure, digital readiness for regional trade, as well as digital capability. Now, earlier today I heard solutions for Africa are found in Africa. And that's why today we are joined by two excellent leaders who are helping transform these challenges into opportunities. And we're really looking forward to hearing the stories. So to start off, I'm not going to try and introduce the two of you. I think you need to share a little bit with the audience who you are. So, Mohammed and Jacqueline, I would like to start by hearing a little bit about yourselves, your journey, a bit about your companies, but also what drives you? What makes you passionate about Africa and SMEs and financial inclusion? We'll start with you, Mohammed.
Thank you. Thank you very much. Good morning. Good morning once again, ladies and gentlemen, distinguished guests from Ghana and across the continent. My name is Aurangzeb, Mohammed Aurangzeb. I'm working as the CEO of Asha Savings and Loans. Asha Savings and Loans is an entity of Asha International, and this is an international microfinance company working in grill funding MSME in Africa and Asia. Currently, we are working 13 countries, and out of 13, 8 is in Africa. 3 West Africa, 5 East Africa. We're in Ghana, Sierra Leone, Nigeria, and East Africa, we are working in Kenya, Tanzania, Uganda, Rwanda, and Zambia. We are currently serving 1.2 million MSME borrowers, predominantly women, like 98% of them are women, with a portfolio of 250 million USD. And we are only one microfinance company who is listed in the London Stock Exchange premium sector. Well, my passion is working in the development sector, is thriving me, especially helping the unbanked sector who are yet to be, getting assistance from Universal Bank. So that helped me be motivated to contribute who are not yet in the bank. And I'm in Ghana for quite a long time. I came here only for 2 years, but being motivated, I'm here for 15 years. Thank you.
Jacqueline.
Good morning once again, ladies and gentlemen. I'm Jacqueline Mpari, and I think Ghana has served you well, Mohammed. That's why you're here this long. We have something in common, which is the MSMEs and SMEs. What I have done in the last over 10 years is digital banking. And I am a financial inclusion enthusiast, very passionate about it. And that passion, I believe, was birthed in the first MasterCard Symposium for Financial Inclusion in Turin, where we were talking about client centricity. And I have seen my career skewed towards financial inclusion, digital banking. In the last 5 years, I've led agency banking for EcoBank Group. We have 35 countries where we have operations, and we have rep offices as well. What I have focused on is to work with the team at the country level to develop agent networks. And I believe that Ingrid was talking about the fact that in Rwanda, they hadn't seen much growth in the number of people who had accounts, bank accounts, but mobile money was growing, and needed to know how we would be able to still provide banking services, but sort of curated to suit the mass market and inclusive, get everybody included. So basically, we've moved from a service channel, agency banking by definition, mobile money makes it easy. So we say it is like mobile money, but it's a bit nuanced. And today we're not doing deposits and withdrawals at EcoBank, just that. But as permitted by regulators, we're doing remittances, we're opening accounts, not light KYC accounts, full KYC accounts, including SME accounts. We're doing interbank transfers, we're issuing cards, both prepaid and debit cards, also as permitted by regulators. We do mobile money, we do loan origination, bank assurance. So basically, we have been able to grow it into a sales and distribution hub, just so that the traditional branches can focus on more complex interactions. So that's what I've been doing.
Thanks, Jacqueline. But while you have the floor, let's continue and dig in a little bit deeper now. Both of you have institutions that are, for a loosely used, a pan-African presence. And that said, I'm sure that each market has its own challenges, its own risks, its own opportunities, and its own nuances. Maybe you can share a little bit about how you are navigating some of these situations, and how are you looking at designing products that support the different countries that you are working with. So Jacqueline, while you have the floor.
EcoBank is in 35 countries. We have presence in West Africa, Middle Africa, not so heavy in Southern Africa, and then in East Africa. And you would realize that across these areas of operation, there are different regulators. We have the UEMOA region, which in-house we call Francophone West Africa. There's the Anglophone West Africa, and we have Central, East, and Southern Africa as well. And what we've done to be able to grow the business is to make sure that we're working along the regulator. I have to be politically correct because it's BOG. So we work along with the regulators to make sure that whatever products and services that we have for the various markets are within that framework. And then we also work with stakeholders, private sector, and different groups to ensure that whatever we're curating is something that will be meeting the needs of our customers, client-centric services, basically. So I believe it's been collaboration for us with the central banks, and also having a group office with personnel that coordinate these operations. And because I sit in the group, and you have some sort of a global oversight of everything that is happening. So we're not working in silos, and I believe that has been our success story, and enabled us to be able to be compliant, enabled us to be able to have the level of adoption and uptake of our products and services across all the business segments. So we have corporate and investment banking, commercial banking, which is the SME banking, basically, and then consumer banking as well, retail banking, if you call it, yeah.
So the utilization of local staff helps to make sure that it's market relevant.
Absolutely, sure. And making sure that there's a lot, the team that makes up the particular affiliate within the country. So if Ghana, if we come to Ghana, the managing director is likely to be a Ghanaian. Sometimes there are managing directors and key management personnel who have experiences in other countries as well, who go in to support and then allow the locals to be able to work. And bringing in that local content and making sure that the team is, the local people are part of the team is also very important, just to make sure that we have the right direction and providing what we're supposed to provide to the markets while we make profit, of course.
Yeah, of course. Mohammed?
Yeah, thank you. Yes, see, different country, different regulator, it is primarily a bit challenge, but with the time, it is also helpful. In our case, we started business in Ghana in 2007. At that time, the microfinance was not fully regulated. A regulatory environment was not there. But we started as an NGO, then the regulation developed, and we converted our business under license from central bank. And what is benefit from here? So based on experience from Ghana, we also applied deposit taking license or MFB license in Nigeria. And when we achieved the license in Ghana and we present it to CBN, Central Bank of Nigeria, it becomes a benefit that the Central Bank of Nigeria is convinced that as they have the operating license in Ghana, so Nigeria would be fine for them. So that is the success. Now we are trying it for Bank of Sierra Leone, So I was there last week. We met the honorable government, and when I mentioned that we have already MFB license in Ghana and Nigeria, he is 25% convinced that we deserve the license. So this is our strategy. We start in one country, then based on the experience, as West African market is similar, East African market is similar. So East Africa is, the structure is a bit different than West Africa, especially the ownership. So we started from Kenya, Tanzania, then we are approaching to other countries. So this is helpful. The challenge is, different market has different issues. Sometimes it can be high inflation, sometimes it can be demonetization, sometimes it can be electricity or natural issues. But again, the neighboring countries are always similar. So we use one country's experience to operate in another countries, and that have been very helpful. Thank you.
I mean, so the topic is, how do we grow this, right? So Mohammed, what would have made that process a bit easier for you in the different markets? I know this is a little bit off track, but like, are we talking about harmonization of regulations? Are we talking about interconnected infrastructure? A greater support through collaboration with fintechs? How would this have been made better so we could scale and grow faster?
Yes. You see, like, initially we started as a microfinance company. We understood the market. Then, as I told you, that we are in MSME. So we started with micro. Then after getting license, we have been in the small. So in Ghana, currently we are serving 230,000 clients across the country. And at this stage, what we are doing, we are collaborating with a different fintech company to scale up our business so that we can reach more people across the country. People don't need to come to the branch to take loan. They don't need to come to the branch to pay the loans. They can take the money anywhere, sitting in their living room or in the shop. So a lot of fintech company, they have approached. We have made an agreement, and we're building up an app to operate our business across the African countries. And we're going to launch it in September, and we're very sure with this initiative, the client growth will be in triple in next 2-3 years. So it is a step-by-step approach. If you like to serve the whole country in the beginning, this might be a big challenge. So in our understanding, we need to go step by steps. But one challenge is there. You see, the fintech for trading and fintech for loan payment is two different issues. Fintech for trading is when you are paying for goods and service, mindset is different. But when the customers are paying the loan installment, the mindset is different. Yeah. You disburse in the mobile wallet, people are happy to take it. But when it comes of payment, you see yes. There is no money in the wallet. So in our case, we suggest, based on our experience, in the case of collection, still there shall be human touch. A complete dependency on payment for small and medium-sized loan through fintech might be a big challenge. So human touch is still needed. Thank you.
Yeah, and I like the idea of that you're trying to eat the elephant one spoon at a time, for sure. And that makes sense. I think to a large degree, it is true that in the African context, completely moving to digital can be isolating to some extent. People still want the human interaction. And that has been, we've seen that in almost all innovations, that element cannot be removed. You were nodding vigorously there. Tell us a little bit from your side how.
I found it quite interesting talking about giving out digital loans and still a human intervention with collections. I think we'll talk some more about that, Mohammed, later, you and I. It's true what you said about the journey to digitization and the fact that we still need some human element. And that is where I have come from, agency banking, just to sort of bridge that gap. We have an app as well. There's USSD. Mobile money set the pace for us. But with mobile money, you would realize that they have agents as well. And the agents are ambassadors of the service providers. The agents are our advocates. They're selling the conversation about having an account and all the value adds that come with the account and how it improves your livelihood. So I believe that someday soon, we will have a fully digitized economy, and we wouldn't need human intervention, but it's a journey. I think it's going to take us a while. So we have agents out there. Some service providers have contact centers. You can call in and have a chat, ask you questions. So I guess we are on the right path, I believe. I believe, actually, we're on the right path. And like you said, eating the elephant one spoon at a time, we will definitely get there to that full level of digitization one day soon.
Yeah, and I actually think the pace in Africa is faster than most other parts of the world, simply because we're so open to innovation and we have the ability to leapfrog legacy systems, which was kind of mentioned in the previous panel as well, and take the learnings and actually just leapfrog some of the things that went wrong, for example. But Mohammed, earlier you were talking about some of that a big part of your market is actually almost 98% women, right? And we know that, women, the G20 has prioritized the empowerment of women, particularly focused on how we can support women entrepreneurs in this space. So I'd like to hear a little bit more about what you're doing in particular to make this easier for women to either access finance, other products, specifically for women, or are they homogeneous? How are you approaching the women entrepreneur that makes you successful in this market?
Thank you. It's a very good questions and very interesting also. Typically there is a belief that those who are in the down of the financial pyramid, especially the market women, they are not credit worthy. If you give them money, they'll run away with the money. That is the traditional belief. You will not get them. Sometimes they cannot give collateral. Financial literacy issue is there. Well, in the case of Asha International, we have successfully, handled this. By the way, I'm from Bangladesh, and Bangladesh is the birthplace of microfinance, Grameen Bank, BRAC, Asha, Dr. Yunus. So I'm from that country. I have that inherited experience. I'm sure some of you know Grameen Bank, BRAC, Dr. Yunus. So I'm from that land with some inherited experience of microfinance. And I've been, grown seeing a Grameen Bank office around my home district. Anyway, so in our case, first we talk to the, neighborhood people, especially the women, that we have some sort of small loan for them, and if they like to have this. And mostly, the banks, they focus in the rural area, but we start in the semi-urban, banks start in the urban area, but we start in the semi-urban, rural area. And talking to them, what we try to do, we try to create a trust between the borrower and the lender, not collateral, a trust that if you pay the loan in 6 months, you will get another loan. In 6 months, you will get another loan. So in 2007, we started a first loan with 200 Ghana cedi, that time, when we started the business. And the borrower who started with 200, with 6 months, 6 months, 6 months, some of them are enjoying 50,000. So that is the journey towards the loan cycle. So still I believe that if in the SME sector, MSME sectors, with the women, if we can, set up a trusted relationship with the borrower, it would be very interesting. Ladies and gentlemen, you might be happy to understand that, see, Asha, we don't take any collateral, but our rate of recovery is very high. If I may ask, what is your expectation about the rate of recovery of the company in Ghanaian competitive market? Anyone? Can you guess? Our collection rate from the customer, 90% Oman, without collateral, no collateral. So you'll be happy to know our rate of recovery is 99.7 or 8%. It is not from the for 2020 or 2022. It is from the day beginning. Our portfolio at risk is 0.02. So all this is possible if you concentrate on this SME sector, MSME sector, and with special focus to Oman. I have been brought up in Asia, and I'm working in here for 15 years in Africa, especially West and East Africa, and I have seen this, the spirit in African Oman is amazing, the one shop, one house, one shop policies. So if we can use this sector properly, it can be a big blast. That is our experience across the continent. Thank you.
Wow, that's an amazing story. I can't believe your recovery rate is that good based on trust and no collateral.
It is based on trust.
Fantastic.
It is. We don't take any collateral. People become very, surprised. Bank of Ghana, some of my respected regulators are here. They know our rate of recovery.
Jacqueline, what about you, focused on women entrepreneurs?
I'm completely blown away by the recovery rate. Okay, so I was going to pull out a brag sheet to talk about what EcoBank is doing with women entrepreneurs and women-focused businesses. We're also doing, we're also giving out loans without collateral. But for a typical commercial bank, we have our backs covered. And this is through partnerships with DFIs, the likes of the African Guarantee Fund. Last year, we signed an agreement, $200 million, to just support with the likes of SMEs, MSMEs. We have a product portfolio that we call Elevate. It's for women-focused businesses. It's not women-owned, but just women-focused businesses, where we're giving women up to $50,000, no collateral loans, collateral-free loans. And it goes beyond the acquisition of the account and collecting the monies back to advisory services, basically hand-holding them and making sure that they are fully literate in the kind of business that they're running. We know they understand their business. However, there are certain nuances that we bring to bear. We're able to bring them together for training and for networking as well, because somebody's end product is somebody's raw material. And there are forums that we've had bringing them together in the different countries. And we recently launched that, a relaunch of that. So that's what we're doing in the women's space, just to support women-focused businesses. Yeah.
Yes. So Jacqueline, you've already alluded a little bit to supporting them on the digital literacy side, and we know for a fact that, so that's a nice segue into what I wanted to ask next, which is, digital payments, digital innovations are fantastic. They accelerate the possibility of reaching people, but then we also have the challenge of greater fraud, greater scams, the issue around consumer protection and how we can support this community in terms of digital literacy and financial capability. Do you have some programs in place that you are utilizing to actually upskill your consumers to that extent and making them aware of what they should look out for?
We do. I would just want to take a step back to clarify that it's not just digital literacy or digital inclusion, but just basically 360 degrees, managing their business, inventory, their stocks and all of that. So financial and non-financial support, that's what we're providing them. In terms of consumer protection, customer protection, data protection, we have platforms to facilitate transactions and to help to support their business. And the very basic, the start point for us is the KYC, to make sure that we have enough information on these customers and to make sure that there's a unique identifier in the system which is within the regulatory framework. And we have gone beyond just accessing to the multiple factor authentication, two-factor authentication, biometrics, facial recognition, and the mass market would tend to gravitate more towards biometrics because sometimes they tend to forget their passwords. So these are some of the measures that we have in place to ensure that they are transacting in a safe environment. And within the SME portfolio, we also have different categories. So depending on the nature and the size of your business, we know what your capacity in terms of how tech savvy you are, and then avail the necessary platforms to facilitate whatever it is you're doing with your business and to make sure you're transacting in a very safe environment.
Mohammed, on your side?
Yeah, it's almost similar, but in our case, we go very down of the financial pyramid. So like even we are ready to give someone loan who cannot sign off in the application but can give a thumbprint. So we go a bit different approach, like training, awareness build up for the very down level. But when we are going for a bit mid-level, it is similar to her.
Yeah.
Thank you.
No, I think the idea of digital identity, I think, will flourish quite a bit in Africa, simply for the very reasons that you've pointed out around, maybe forgetting the PIN or being unable to sign or write off, etc. I think that is something that we, I think in the previous panel, Kwame and his fellow panelists discussed that digital identity is going to be a core infrastructure in Africa to support particularly SMEs also in this space. Before we open up to the audience, Jacqueline, I thought you could talk a little bit about how you are engaging on the African Free Trade Agreement and supporting intra-Africa trade in this space.
EcoBank, prior to a very strong partnership with the African Continental Free Trade Area Initiative, we were able to facilitate some sort of regional trade within the affiliates where we operate. Basically, bank transactions cross-border, because we have the same core banking application, and that made it relatively easy. So that sort of put us a notch ahead of the pack. And today we have this partnership, and we have a single market trade hub that we have introduced. So it's a digital marketplace, basically, where we allow suppliers and buyers, exporters, importers to interact, basically, and to facilitate cross-border trade. And we have a platform which is called Rapid Transfer. I don't know if people are familiar with Rapid Transfer, but very much like PAPS, and we have that collaboration as well. And you're actually able to send money, make payments, cross-border payments, and whoever the recipient is receives it in local currency. So the whole FX conversation is within the bank, and we're doing the switching, we're doing the settlement, and then facilitation. And beyond where we have operations, we have partnerships as well, fintech, mobile network operators, and some of these transactions are terminated into wallets as well. So that's what we've done. So on the digital side, and then in terms of partnership, both financial, non-financial, we're able to do that because of our presence as a Pan-African bank.
No, I agree. Collaboration with other partners are essential in this space, fintechs and other service providers. Can I open it up to the floor? You've heard some of their amazing stories. They are having a massive impact in Africa already. Is there anyone who wants to ask them some burning questions or hear a bit more about anything in particular?
Hello? Great. Good morning. My name is George Ajabing, and I'd like you to dig a bit deeper about using trust as collateral in Bangladesh. This seems to be a very unique concept on how you were able to recover your funds. And then secondly, I am more of a preacher for persons with disability. Are there any specific programs that you have that is targeted at persons with disability? Thank you.
We'll go with one question or some.
Maybe we can get the other question as well, and then we'll try to answer.
Thank you very much. My perhaps goes directly to maybe EcoBank and as a gentleman can also answer. Is it as you move monies across continents, within wallets, etc., consumers or clients are also concerned about security? What assurance can you give us, can you give consumers, that our funds are safe as we do all this transfer, payments, etc.? Because that is what most of the unbanked fear of, and therefore they don't transact. What security do you have in your systems to assure customers? Thank you.
Any other questions? Oh. Okay, John, maybe. We'll take the first three.
Yes, it's good that you lend to ladies without collateral, but at what interest rate?
Okay, so let us answer those three questions first. Mohammed, I think two of them went to you, and Jacqueline, the one on security and consumer protection goes to you.
Yes, the first question, a loan without collateral and 100% repayment. It sounds crazy, but it's crazy, right? It's crazy. But you see, like, first of all, if I ask you, do you believe it is possible? If you don't believe, then the game is over. We don't need to talk. Because you don't trust it is possible. That is the first problem. You don't have confidence within yourself that if I give a loan, it will come back. So if you don't trust, you can't do it. I'm doing it because I believe it. That is the basic difference. Well, I'm coming. See, in the beginning I told that getting money in Ghana, West Africa, African continent, access to finance for the people living in the down of the financial pyramid is very difficult. Banks are not there. Even if they are there, they don't trust these market women as a creditor of the borrower. So what we do, we approach to that, those or this segment who normally don't get support from traditional bank. So when we are approaching, we are presenting ourselves as a hope to them that, see, you went to ABC, nobody respected you, but I'm here to help you. And I know you don't have collateral and you cannot give collateral, but still I like to give you loan. And when you pay, in 6 months, 8 months, or 1 year, I'll give you another loan. Then you pay that loan, you will go to next level. You can have your own shop. You can send your children to school, and you will have respect in the family because you are earning money. So we invest a lot of efforts and time to motivate our borrowers to be aligned with us with this same mental setup. And that is helping us to get the recovery. We never take a borrower to the police stations or the court. Never ever. We don't. So, it is a group loan. When someone is not paying, other people also encourage her to pay because they don't like to take a bad name for the group. Second question quickly, we don't have enough time. Mr. MC is looking at us. Second question, the interest rate. That is a very vital point. Unfortunately, the bank, with due respect, they don't have confidence on us, the SME sector. They think if you go to loan to EcoBank, 90% chance I'll not get. Because they think if they give me loan and I give it out to customer, I'll not get the recovery, they will not get the loan. So, national bank, you will not get. So you go to international lender. So when you get a loan in dollar, you need to go to the central bank for approval. They will tell you, no, foreign loan, you cannot pay. So where should you go? That is a big challenge for SME sectors. We don't get fund. But what we do, we tell our customer to deposit some small money. In Ghana, we tell it, kakra, little money, like 5 cedis, 10 cedis every week. And that support us to build a capital and give it out. And they also get some small interest. So the interest rate, it varies from 2 to 3% per month. So that is all. And if you go to banks, it is much more than us. Why our interest rate is within range? Because of the high recovery. We don't have bad loan, not at all. I think I have answered my part.
Jacqueline, I think the one question was directed at you. Yeah.
Regarding the security, I mentioned earlier that we have the multiple factor authentication, and that comes with a lot of customer education. You need to carry the customer along. And we have all touch points, social media, print media. We send SMSs as well. With every SMS that we send for transactions, there's a footnote, there's something to show that you need to make sure that you're not giving your PIN out. If there's a conversation with a contact center, there's some due diligence they have to go through, some basic questions that you're asked. If there's a point about somebody not being able to read and write, talking about the SMS, you can call the contact center. But I would say that it has been a collective effort, not just with commercial banks, but fintech, mobile money operators as well, campaigns about social re-engineering, and you would see that lately people are on their guard. You would have somebody call you telling you that they sent some money to you and send it back to them, but now people know. So I believe it's been a journey, and while MTN is doing it, EcoBank is doing it, FinTech is doing it, ASA is doing the same thing, and this collaborative effort has helped, and that is how we are assuring customers that they are transacting in a safe place if it's digital and not physical transactions or touch points within branches.
I saw quite a few hands up, and Mr. Moderator is telling me to wrap up.
We're joined by the Director General of the West Africa Monetary Agency. He has a few thoughts to share, particularly about safety, security, and a current existential threat.
Yes.
Mr. Boima Kamara, ladies and gentlemen, a round of applause.
Thank you. Good afternoon. As we sit around the table and just reflecting, why we encourage and will always want to promote the need for better services as in fintech, what it brings to the table. I just wish to point out some issues that are arising that we have to take on board, especially with respect to the regulatory environment. There have been cases of 5 fintech failure. Of recent, in April 2024, a major fintech company in the US called Synapse experienced what we call an abrupt shutdown and bankruptcy, leading to over 95 million unreconciled amount. And as we speak, this phenomena is now becoming to be more pronounced. In the Philippines, a fintech called Wirecard also experienced a situation of 1.9 billion euro that never existed. And if you ask the Filipinos, the response was, we've never seen that money. In Ghana, MTN Momo, the float fork, issues around billion flowing float, considered to be unbalanced. Nobody knew where the money went. Another fintech called Abra, as in dealing with Bitcoins, the issues about clients, company regulators, not known. And the last of which is called Refund. When pressed, money never to be found. I will just leave on this note by saying, with the rapid proliferation of digital everything, digital loan, digital payments, digital revenue mobilization or collection, digital remittances, digital debt payment, digital wallet, just like with digitalization came cybercrime. So the rise of fintech is also resulting to reconciliation failure at scale. And we pray, as we discuss within this room, the issue about strengthening the environment in which fintechs operate, especially issues around reconciliation, should be of a greater concern. And on this note, I say, just like Mr. John Molu would say, if no one knows what's missing until it is too late, you can't protect it. I thank you.
Thank you. And so with those penetrating thoughts from Mr. Kamara, Madam, what say you?
Okay, so I'm going to let her ask her questions because she's been asking me the entire time. She's just one person.
With the loans and everything else, I just wanted to find out how you are making sure that your facilities are not being used to encourage or proliferate money laundering at any level. Because somebody might take a loan, they have some money to launder. How are you ensuring that this money is not coming through the system by ways of repaying these loans to ensure that the banking system stays safe? Either one of you. Thank you.
Well, from my side, and even it might be a combined answer also. See, like we are licensed company, and like all these AML, CFT guidelines are properly, placed. So check and monitor that these are being used properly. So that is the answer from my side. Jacqueline, if you'd like to add something.
Exactly. But if I may, I would actually like to know, following the submission that we just had and the food for thought at the end of the submission, I know that there are industry experts, players in the room. Maybe it would be great to hear one or two on comments on what is practically being done to ensure that our customers are transacting in a very safe place. If we're not able to answer some of these questions or plan for them, we wouldn't see much adoption and scaling would be difficult. But we also cannot scale and have everyone included if we do not do it the digital way as well.
Yeah. And I think that's the whole difficulty. It is more inclusive. It does work better for our people, reaching our people. But at the same time, I think the point is we need to keep everyone safe because they are trusting us with their money and with their livelihoods. So I'm sorry, but we have to wrap up because moderator is going to be very upset with me right now.
Ladies and gentlemen, a round of applause for the panel as they wrap up a group photo. And so the stage has been set for our next discussion, which is regulating the future, Africa's path to digital asset adoption, and finally, investor outlook on Africa's fintech future. What we want to do now is to explore how stablecoins and digital assets can be responsibly adopted within Africa's regulatory framework. I believe it will border on trust, it will border on security, and all that is necessary to make regulation robust. Moderating this conversation is a division chief at the IMF, Luca Ricci. Please welcome Luca. He's joined by the Chief Legal and Policy Officer, Stellar Network, Candice Kelly. The CEO, Global Policy House, Michelle Shivunga. And yours truly, Director, FinTech and Innovation Office, BOG, Mr. Kwame Opong. "30 minutes and then 15 for." Thank you. Yes, please.
First of all, I really would like to thank the governors, Bank of Ghana, and all the organizers for inviting me and for the fantastic event. Thank you very much. So this panel is about the role and the regulation of digital assets and stablecoins towards the digital financial future in the continent. And I'm Italian like Matteo, but I've been at the IMF more than in Italy, so I'm not going to attempt to emulate his elegance in making jokes. So back to our topic, there's been exponential progress in adopting and promoting innovative technology solutions for digital payments in the Africa region. And more recently, there's been a new push in some advanced economies in favor of stablecoins, which may support a significant increase of the already high attention to the role that digital assets can play in international financial integration, as well as in financial development and inclusion, including in Africa. So the goal of this session is to share experiences and visions on the role that digital assets can play for the African continent, explore best practices for developing an adequate regulatory framework that can drive innovation, attract investment, foster collaboration, while ensuring financial stability. So let's hear from our distinguished set of panelists. And please, along with the question, it would be great if you can introduce yourself and highlight what your institution is doing to promote digital and financial development in Africa. We're going to have two sets of questions. The first one is about the role and risks of digital assets. Candace, let me start with you. what do you see as the main drivers and use cases behind the growing adoption of digital assets in Africa? Thank you.
Thank you so much, and thank you to the Bank of Ghana for inviting me. It's an honor to be here. And I will start with a little introduction of the Stellar Development Foundation, which is where I work, because I don't know as folks are very familiar with it, unlike many of the people who've been on this stage who are very familiar names and faces to all of you. So the foundation supports a network called the Stellar Network, which is a decentralized blockchain network. And that network was, not all blockchain networks are created equal. That network was really created with asset issuance and cross-border payments in mind. So with asset issuance, stablecoins are sort of the primary assets that are running on the Stellar network. And cross-border payments, because it's fast, it's easy, it's very cheap. For 50,000 transactions, it costs about 1 cent US. And so what we have seen, particularly both in Africa and also in South America, well, I should stop by saying the foundation's mission is creating equitable access to the global financial system. So we give grants, we give technical support. We don't have generally user-facing products, although I'll tell you a little bit about a joint venture we have here in Ghana. But what we have seen in terms of use cases is in places particularly where there's people who are unbanked or underbanked, or where there's a lot of friction with cross-border payments, is that it's a way to bring wealth into a community and in a fast and efficient manner. And the technology, as we've heard from others today, is there. So I want to tell a quick story about a use case that's happening. It's in South America, but it could be anywhere in the world, which is a community where mostly women were working on a particular project. They were all unbanked. So their employer would go to the bank, and he would go and he'd collect cash, and he would distribute the cash to these women. And one day he was doing that, and he was shot. This was in Colombia, South America. And he survived, thankfully, but he learned about being able to use stablecoins and digital wallets to make payments to his workers. So it was a safety issue that drove it, like a physical safety issue. What evolved there was not only did these women, they were unbanked, they were able to receive US dollar-backed stablecoins, cash out at MoneyGram, because MoneyGram is integrated with the Stellar network, and they can cash out in their local currency. But not only were they able to do their job that they had been doing, but it opened the entire internet and global reach for them to engage in different activities. So they serve as translators, they serve as remote workers, and they're still able to get paid. And then here in Ghana, we're working on a joint venture with the Creator Economy, which was amazing to have the poet here and it's been great to be here for a few days and see the power and the vibrancy of this Creator Economy. And luckily we had local, we don't work here or operate here, but we joined up with the Akuna Group, which is an Idris Elba's foundation, which is very mission aligned. And so with an amazing team that's here on the ground in Ghana, we are working in the sandbox with the Bank of Ghana to create a digital wallet for creators who have a very difficult time getting paid internationally. So if you put these amazing people who are putting out beautiful things into the world, they can't get paid because their bank account is Ghanaian or because it's very expensive. And so through this pilot project, the Akuna wallet, we create a virtual US bank account. So they have an account there, not through the wallet, but separately with that institution. And through that virtual US account, they can get paid by international people. It gets translated into US dollar-backed stablecoins, and then through their wallet here and through local partners like Chipper Cash, they can cash out into local currency. So all sorts of ways to bring wealth and to ease the frictions of cross-border payments into the continent.
Thanks a lot, Candace. It's great to hear, in particular, about use cases at the micro level in remote areas, which is extremely relevant for the continent, and how anyhow, they're conduits to move money across the ocean. Michelle, let me come to you, and I'd like to hear from you about what role can digital asset play in connecting markets across the African continent and enhancing the regional integration that we already discussed this morning as a very crucial for the development of the continent. Thanks.
Yeah, thank you so much, Luca. Afternoon or morning, everybody. I'm trying to figure out, because I've been in different time zones, New York, wherever, I'm trying to work out what time zone I'm in. But thank you so much. First and foremost, I want to thank the Bank of Ghana for the invitation to come. This is a follow-on, obviously, from the 3I last year, which we did talk quite a lot around digital assets. But back to your question, I think digital assets have a major role to play in terms of connecting the African market. But before I go into your question, I just wanted to also highlight around the importance of regional integration. We've just come from actually celebrating the launch of the Digital Trade Protocol in Lusaka with our heads of state in Africa. So, you know, there's a real big drive now for that one single African market, as you've heard earlier on. And now really we are talking about implementation. And we're talking about delivering. So we've got the fantastic protocols, we've got the policies, we've got the regulation, and we've gone and launched that now. And most economies, most nations are now thinking, okay, what next? How do we now deliver? Whether we're talking about digital identity, we're talking about digital infrastructure, we're talking about data, we're talking about fintech, we are now saying, okay, how do we actually implement? So for me, digital assets is something that I think that's not as covered in depth as we should cover it. And it's an area where a lot of economies want to understand better. What does digital assets actually mean? What are we talking about when we refer to stablecoins, cryptocurrency, central bank digital currency? What does this all mean? And I think we need to start from there, right? We need to provide the right capacity, education and training and support. But I do think digital assets is going to be a major enabler in terms of connecting the continent and also connecting the continent into other international markets. So I do believe that when you start to think about regional integration, so we want to create one single African market, we want to industrialize, we want to make sure that Africa is growing and is growing together, as we've heard earlier on in the morning. So it's not just Ghana progressing, it's not just Nigeria, it's not just Zambia, but the whole of our continent, which means basically bringing together 55 countries. How do we do that? In terms of monetary policy, and let me contextualize as well, we're not saying that just go off and adopt, for example, stablecoins. We have to bear in mind that we enable our traditional functions, which is monetary policy, ensuring financial stability. All of that can happen, but we can also innovate. And we have no choice but to innovate. Because how do we connect the continent? In terms of monetary connection, we need to leverage new assets. We need to leverage digital assets because it enables us to be able to connect more seamlessly. And with digital assets, you can also enable payments, for example, cross-border payments to happen much faster. I also want to emphasize around monetary sovereignty, right? We need some monetary sovereignty. Countries need to be able to leverage off their currency and strengthen their currency. So that's second point. Yes, the regulations are there. Yes, regulations are very important. And those regulations, as you've already heard, have to be harmonized. But beyond the regulations being harmonized, how do we create monetary independence? For me, it's a very exciting time right now, because what we're literally doing with digital assets, you can create monetary independence. I'm sure it's not news to everybody, but money from all over the world is not necessarily coming. Most of you, I'm sure, have been watching the news, right? Whether it's the US or Europe, the amount of funds or financing that's flowing into the African economy is going to reduce. And for me, as a young African, to be honest, I find that very exciting because it provides an opportunity to create our own capital, to strengthen African capital, to strengthen capital markets here, and to look at new ways of actually finding capital. So, when you hear the news around reductions in aid, reductions for, investment, I think for us as young Africans, we need to think, oh, wow, this is a chance for us to build our own. This is a chance for us to create our own finance. And I think digital assets, in particular, will play a very significant role. A good example, stablecoins, right? We've all heard about stablecoins. I would like to see an Africa-backed stablecoin, right? And interacting and interoperating with the USDT, with the Tether, with the, we need to have our own, I think, in terms of Africa, where we have our own stable coins that we can use to actually help us either to trade right? Trade, intra-African trade, boost intra-African trade. I don't need to tell anybody here that we need to boost intra-African trade. Our Secretary General, we've been working with Secretary General to draft the Digital Trade Protocol, right, which is now ratified by the heads of state. But now my questions and my comments to the head of state just last week was, Your Excellencies, now that we have the protocol, can you now allow us, give us the fiscal space, the policy space to bring in innovation to help us deliver that digital trade protocol and deliver on intra-African trade with monetary independence, with monetary freedom, and with forms of money that we're not sitting and waiting for everybody else to bring. We have to create our own. Thank you.
Thanks a lot, Michelle, for highlighting the interlinking of digital assets in the context of challenges related to trade integration, monetary policy, access to finance and global capital markets, and launching the idea of an Africa stablecoins. If there are any takers, please go home, reflect, and I know there are lots of smart brains that can do that very quickly. Kwame, please bring the perspective of the regulator on this. We heard about use cases, opportunities, and I'm sure the regulator immediately thinks, what are the risks? So can you tell us what are the risks for global stablecoins and digital assets in promoting digital finance in Africa? Thanks.
Thank you, Luca. And as you may have observed, when we don't understand it, we just revert to stability risk and run away from it. We're really at the point where the reality is that there is usage going on the continent. Our initial posture as regulators across the continent was, it's not regulated, is this even going to go anywhere? Is this something that is really money? How do we approach it? And I think we've gone from dismissing it to paying attention to perhaps studying it a bit closer. The adoption of stable coins within the region, I should mention, I think just virtual assets more broadly is more significant than we thought. Countries like Nigeria are showing about 22 million users at this point, and that's about 10% of the population. Ghana actually has this, significant adoption as well, about 3.1 million users, according to the data that we have access to, and you're looking at this is about 17% of the adult population, but you're looking at a significant bias in adoption of these versions of money. The bias is heavy on stable coins in Ghana, which suggests the use cases, because typically, people are trying to invest, save, transfer, pay, remit, etc. But if you break it down, you're seeing that people are trying to solve a certain problem with stable coins. So at that point, there's certainly utility that you can't dismiss. But how do you approach it? Because on the other hand, as mentioned, there are monetary policy considerations, broader financial stability risk. If you disaggregate that, you're looking at consumer protection risks. Unfortunately, even people who want to utilize some of these products and services that are associated wind up falling into multi-level marketing schemes and all kinds of scams. How do you make sure, especially as regulators, if you're going to put something out there, whether it's a policy or as a directive, that you're effectively telling people it is okay to go in this direction? And second to that is the issue of, if you even regulate this, how do you supervise this on an ongoing basis, given its inherent cross-border nature as well? But this is where it comes down to the idea of forward-thinking policy and posture. It is, one way or the other, going to be part of the future, and particularly all the various innovations that are emanating from the blockchain environment. So the only way we do it is, as we spoke about this morning, test and learn. It's the reason why we've partnered with Akuna Foundation, the Stellar Development Foundation, and we're testing this idea of how we support the creative economy. And lest we forget, the creative economy and creators are as close to the tech community as it gets, because both are actually creators in many regards. So you can't you can't dissociate the two. So I remember last year's 3i, and you have Mariam and a few others here. Yes, the team were insistent we need to invite the creative community. And so when we had a roadshow, I remember the Bankers Association, when we had a roadshow to try to introduce the concept to stakeholders, we invited a few I think, musicians and artists. And then we started learning something, which is we've been sitting in this country and perhaps on this continent and not realizing how much we are letting go in terms of value to the economy. Because I do not recall any conversations about the economy having a meaningful focus on the creative sector, for instance, in terms of its direct economic contribution. Turns out, and as we learned subsequently during the actual 3i last year, so post the roadshow, that not only are the artists within our environments and our countries foregoing so much revenue because they neither have the capacity to safeguard their IP or to monetize it or to even be able to receive payments internationally as they should, they were effectively losing these funds sometimes to even other governments who, after a while, if you don't claim the royalties, it goes back to them. And so suddenly we thought, okay, this is worth exploring to at least understand. And we're hoping to learn a bit more from how this can be addressed through this Akuna project, so that all those from artists, these musicians and comedians and the rest with their own creative content online, let's see how they can also begin to safely receive their payments and to be adequately compensated. And what is the total impact of that? As it stands, we had no visibility. So if you take this as a simple example and you look across the spectrum, what else are we even missing? So the posture of looking a bit deeper into it is not necessarily to say, because we as regulators are often concerned about what like Ali in Bank of England describes as the halo effect. When you go and touch on something that you haven't put policy or laws out there on, it's almost as though you're endorsing it. This is one of the risks in markets like ours, emerging markets. How do you strike that balance? And I think as it stands, we've taken a bit of a cautious position, which is, let's come together, let's understand what you're saying, let's test, let's learn, and let's use that to inform policy. For the first time, we put out a digital asset policy, which is on the Bank of Ghana website. It focuses on virtual asset providers and the rest. And we should be able to, for instance, clarify that we're only concerned about virtual assets within the context of those being used for payment and invested, savings, payments, and all the other functions that fall within our regulatory ambit, and we can address that. But I mean, things like NFT and the rest, which are also having to face some limitations in being able to creatively explore that area, I think we should be able to hive that off and let it live its life. It has nothing to do with us. So the goal at this point is to be able to make that kind of progress by clarifying where our intention is, and that's where we put the framework out, the draft framework out on. And from that point, we've already begun engagement, and we hope to engage a bit more with not just the virtual asset service providers, but key third parties as well, who inform, and technical partners who inform how the policy should look like. So in the end, when we have some finalized policy, it makes sense from a service provider standpoint that they can promote their business and be successful with it in a safe environment. We can also be able to have our oversight and ensure that we prevent any stability risks. But also, for the consumer, they can make sure we can make sure they are safely using these products and services without causing further harm, as is, I heard the director of WAMA actually making an important point, as is an inherent risk in many of these digital financial services that we offer on the market every now and then. Thank you.
Thanks a lot, Kwame, and I think it's great that we see the regulator taking already initiatives on, promoting the regulation of a new area, but also worrying about safety and stability and so on. And your intervention has already jumped into the next set of issues that we wanted to discuss, which is the regulation. So with that, maybe, Michelle, let me hear from you on how you think that the risks posed by global stablecoins to African economies could and should be addressed through regulation. What would be your perspective? Thank you.
Yeah, no, I think the risks, I don't see so many risks per se, but I think for me, it narrows the opportunities for African growth if the dependency is, for example, on external stablecoins alone. And I'm back to my point, when I was saying that it's important that even for the Africa ecosystem to be able to create stablecoins, right, that they can utilize, whether it's in trade or in other sectors. So for me, it's very important that even when we're dealing with external stablecoins like USDC, there might be limitations that come with that, because maybe those stablecoins have maybe convertibility requirements, tax requirements that you'd have to meet, the costs might be higher, or whatever it is. Interoperability again comes in. We've talked about interoperability quite a lot. So how do we mitigate against that? And how do we ensure that we're not necessarily disadvantaged by the fact that we're leveraging other stablecoins? That's number one. Two, we are talking about intra-African trade, yes, which is great. So again, creating an ecosystem where you have payments, very effective payments happening. Maybe those payments are backed by, digital assets, right? And you mobilize, maybe PAPS, for example, is looking and exploring how do we incorporate digital assets, right, through our settlement system. But we're also not trading just with ourselves. We are also going to be trading with the global ecosystem, right? Whether it's the US or the UK or India or wherever. How do we also, start to strengthen African currency, for example, by using maybe stable coins, right? African-backed stable coins to trade and interact with these other markets, and vice versa. How do we also use USDC and other stable coins from other markets? I think it's very exciting and it's quite important. It allows a level of integration to happen there. So we can mitigate against the risks by being innovative on how we tap on these digital assets. We can mitigate against the risk by having very clear regulation. We've talked a lot about regulation, but we need to be very clear, even with our partners and external groups need to understand, okay, what is your rules and your policies around us doing and trading, doing business with you? What are your rules and policies, right? It's very, very important. And for me, I think in this world we are now no longer in just a normal traditional economy, we are in a digital economy. So if, for example, you don't allow data to flow between countries, you're not going to facilitate digital trade, for example, right? If you're being too restrictive around payments and you don't have payments gateways that can happen, you're restricting, again, interacting happening, right? So it's very, very important, I think, that the regulations, as Mr. Kwame has said very, very clearly, that those regulations are not stopping trade and business to happen, and they're not stopping innovation to happen, because we are now in a digital economy. We're not in the same economy that we're in. And this is going to become more and more relevant. I'll take the US, for example. The US is pretty much really leveraging and looking and exploring a cryptocurrency quite heavily right now, right? Cryptocurrency, artificial intelligence, and they're moving and talking about potentially looking at things like a sovereign wealth fund backed by cryptocurrency. We haven't really heard many of those conversations, for example, on the continent. What are we doing in terms of how do we actually, yes, create a regulation, the environment, but how do we tap on those digital assets actually to also help us to interact and do business in a slightly different way, right? But also being backed by financing or capital that might not be coming from traditional sources, but by maybe coming from new sources that we begin to understand better. So for me, it's regulation, making sure clear regulation. 2, tapping on stable coins and other digital assets, right? But in the context of Africa. And then 3, also being very, very, working in collaboration with our partners to understand how are you doing business, how can we do business better? And then let's look at the low-hanging fruits, right? We've heard from GSMA on mobile money, right? We need mobile money interoperability across the continent. So I should be able to come and use my M-Pesa type model in Zambia, in Kenya, in South Africa. I should not be restricted. Have we got that yet? Not really. But I think we can get there. And for Africa specifically, the mobile money integration and growth is going to matter for the global economy. But how is the global economy able to integrate? I came into Ghana, right, today, and I'm behind. Because in Ghana, you can do your payments with mobile money, right? Even at the airport, when you come in, I didn't have mobile money account to do that. I could not, for example, pay for my visa because all I had was my cards and things. Is that cash or mobile money? So I need to upgrade. And I should get my mobile money account that I can use to pay for things. Same in Kenya. I could hardly do anything. I need M-Pesa. We need to look at interoperability.
Thanks a lot, Michelle. You mentioned a wide array of things. Let me just pick on 2, which I'd like to highlight. One is the the extreme need that regulation be clear. That's, of course, essential. And the other one is the partnership and the collaboration that is essential between the regulators and the wider community, which links to what Kwame was saying, that what they're trying to do with Akuna. More broadly, we think this is a very important aspect, that the dialogue is very deep. Like this morning, you were mentioning with the other gentleman of a private sector company that regulators and private sector need to talk a lot with each other. So I think it also connects well to previous participation. And then, Michel, you mentioned about interoperability, which I think leads well into another question that I'd like to ask to Candace now. On how do you think that African regulators can foster a greater collaboration and harmonization of digital asset regulation across the continent? I know it's a broad and tough question.
Broad question. Before I get to that, I do want to just comment though on the sandbox and what the Bank of Ghana has done, and really highlight this, because as you've mentioned, Africa should have their own stablecoin. Well, when I started at the foundation 6 years ago, as I mentioned, the network is optimized for asset issuance. There was a Naira stablecoin, and there was a small issuer and a Euro stablecoin, and they had a very good cross-border trade flow happening. And then Nigeria obviously made it very difficult for people to operate with the SEC and the central bank. And I think it just, and so that company had to switch, and they now are using USDC, or at least last time I checked. And so I think that's just it really highlights how important it is for the regulators and the private sector to work together. So if you listen to Kwame, I mean, the fact that Kwame knows that much about the creative economy now is, if you're going to do the hard things of figuring out how to regulate and how to regulate in an environment where the technology is changing really quickly, you have to first know, why am I doing this, right? We don't all go to work to just do hard things. So when you actually interact with the creators of both the user base and the creators of the technology to see how it's really going to impact and change your community, I think that it helps a lot, both with just the passion to be able to work through these difficult issues, and also figuring out what the right solutions are. So on that, I can get back to your question, but so I think with harmonization, it's similar. I really think that the sandbox, there's one version which is really focusing internally, and then you see more and more. I know Singapore and others have had a lot of cross-border sandbox, particularly on cross-border payments. And I think it's the same thing as what I was just saying about what's happening in Ghana, that across Africa, I mean, there has to be harmonization, because it does need to be one continent and one market. So if we work in silos, we're going to recreate the same frictions that we are trying to solve with the digital economy, with all of the friction. And so I think that's the main thing, is working across and doing sandboxes and projects and pilots that are cross-border.
Thanks a lot, Candace, and thanks also for the previous comment you made on the importance of collaboration between regulators and private sector to avoid that there is a stifling of the fantastic innovation that is very vibrant in this continent. I had one more question for Kwame about the Mastery of Ceremony just carried out. I think, Kwame, you had an opportunity to speak before, so I will have to sacrifice that question to give the audience an opportunity to ask questions, and I'm sure you'll have a chance to discuss more. So let's open the floor for questions. And the lights are very bright, so unless you have a strong white shirt, like, yes, exactly. Strong white shirt makes it easy to see the speaker. Please identify yourself and ask the question. Thank you.
Okay. Hi, my name is Yusuf. I'm with a fintech company in Ghana. I'm lucky to be privy to some of the work that Bank of Ghana is doing on digital asset innovation. So I just want to say kudos to Kwame and the rest of the team. But I think it's interesting to note that unlike the previous two panels, this panel does not have industry representation. There's no one on the panel that's representing cryptocurrency or digital asset in Ghana. And I think that paints a picture about how perhaps the regulator is approaching the industry in general. I think sandboxes have been mentioned quite a lot, and so far, looking at the approach to sandbox, it's looking more and more like a mini license, because the level of understanding that the regulators require before they allow participants into the sandbox is not in a way that truly allows any kind of innovation, unless the innovation has been understood to a certain extent. So especially looking at the crypto area, where Bank of Ghana seems to be changing its posture. Crypto is one of the industries that has also suffered from the point that was raised earlier about should innovation come first or should regulations come first. So without the regulations, the Bank of Ghana just went ahead to kind of issue notices and bans on crypto, as has happened across Africa. And now that Bank of Ghana is changing its posture, I wonder if they've considered revisiting some of those notices, perhaps taking them back, loosening things down a bit, get more of the industry rekindled so they can get the necessary data they need to understand the local context and the kind of use cases that we have here to come up with solutions that will actually, and regulations that will actually be applicable to Africa rather than adopt foreign regulations based on their own context. So just look at the way Sandbox is being approached in general, and if Bank of Ghana may want to take back some of their notices while they figure out the regulations. Thank you. Thank you. And
while there may not have been, or there is no stablecoin issuer on the panel, it is true that the organizers are really carving space for questions. So there is space for any other private sector to ask questions. So before I give these questions to Kwame, let me see if there are other questions so we can collect maybe a couple at the same time. Yes, please, gentleman in the front.
Good afternoon. My name is Tahir Al-Hassan with the FinTech and Innovation Office. I think I have to speak really well because I didn't ask for permission to speak before I received query. So there is one particular issue that has been highlighted about sovereignty. So I think in Africa, when it comes to stable coins, looking at what is happening, we have to be really strategic. And that is why I like the idea of, and we have to work together collaboratively, regulators and industry. There is this problem with the so-called global stablecoins, which IMF has done a lot of work on. So my boss will always say that rational consumers will always choose the path of least resistance, right? So you see that mostly in Ghana and Nigeria, the growing use of stablecoin to solve for some fundamental economic issues like currency depreciation, inflation, and all that. And that's what the consumers, that's what suits them. But as regulators, this also poses a lot of risks for us in terms of what they call currency substitution. So this is just another form of dollarization, as we normally say. So as and you see from other jurisdictions that in addition to evolving frameworks for crypto assets generally, sometimes there are also regulations tailored to just stablecoins to deal with the risks of these foreign currency-backed stablecoins that are very dominant in our market. And the European Union is an example under the so-called MiCA, the MiCA markets in crypto assets. It's a very good example of that. And it seeks to address the stablecoins that are backed by currencies outside of the Eurozone. But that is also possible because there are Euro-backed stablecoins. So they are promoting the Euro-backed stablecoins and kind of, if I should say, de-emphasizing the non-Euro-backed stablecoins. Just to protect their monetary sovereignty.
It would be great if you can now focus on the question.
Yeah, no, so this is actually more of a comment. I mean, just to say that we have to see how best we navigate this. As we explore the best use cases of stablecoins, we have to be solving for these monetary policy risks in terms of currency substitution and all that, whilst we also explore the innovative or the benefits that it gives us. Thank you.
Thank you. And last one, if you could be brief, that would be great. Thanks.
Hi, my name is Maoto. I'm speaking more personally than from the company I work for. I'm seeing quite a lot of money being moved across the world using like digital currency, right? And that's happening. And the guys who are innovating in this space are not in this room, and they will not be in many of the rooms, because the more regulators try to create regulation around this, the more likely it is that we don't want to use it, right? So my question to the panel is there a world where you guys allow this to be free and allow people who are innovating in this space not to be tainted as doing something wrong or dodgy? That's number one. Number two, how long before you think this revolution and surge in stable coins and possibly an African-backed stable coin start to affect the fiat? And are you worried about that?
Thanks. These are all very important questions. Let me maybe give the floor first to Kwame to answer that question, and then each of you feel free to answer all the questions, and then your final thoughts on regulation for the continent. Let's start with Kwame, then Michelle, then Candace. Thanks.
Sure, no, thank you very much. So I think to the earlier question, I think it's important that we put things in context. Bank of Ghana has a regulatory sandbox. It's not an innovation sandbox. You come in there and test ideas, play until you're happy to move. We don't. We're very focused. We're a serious institution. When we engage you, it's because you are there to get a regulatory comment. It's a yay or a nay. It's an up or down vote based on understanding. It's not by anecdotal evidence or appreciation, but actually looking at what something is to understand the merits and demerits, so that that comment can be informed by even a yes, but can you fix this? That's what our responsibility and mandate entails. And so, as you see, we demonstrated clearly our willingness to lean into driving innovation. But we still have a mandate for stability. And managing risk comes first. So similarly, when it comes to the issue of the notices that we have issued, those notices were issued under careful consideration of development on the market. The interesting thing and the beautiful thing, I've sat on all three tables as a regulator, as a technical partner, and as a service provider. It's the amazing variation in inputs and dimensions to things that you see. And so what is amazing innovation that you're pursuing on one hand is a destructive, right? A destructive object or item or service for someone else. It depends on how it's done. And so when you see us blending these things and taking certain positions, it is to make sure that first and foremost, the house is secure. Then from there, how do we make progress? That's what we invest in, and that's what you often see, that we create the avenue for stakeholders to engage us so that we can make progress. If we woke up tomorrow, and I'll give you an example of what happened in a certain country, a neighboring country that I won't mention, it got to a point where there were people in the virtual asset space, or fintechs developing products in the virtual asset space. After having been able to raise some good money from foreign investors, activities, destabilizing activities on the market, among other things, impacted their currency so badly, their local revenue meant nothing anymore because the value had gone down so badly that they were struggling to even service their own debt. Ultimately, when we don't balance risk and opportunity in a reasonable way, we'll shoot ourselves in the foot. That's why we always say safe innovation. And we'll continue to be measured and move with deliberate haste, as we have shown and will continue to show. Secondly, to the point about whether there's a market where regulation doesn't come into any of these things. First of all, remember, In fact, it's, I think it was Singapore FinTech Festival 3 years ago, where the founder or the creator of Ethereum, Vitalik Buterin, who, by the way, was brought to Ghana by Web3 Accra, from which point we started dealing with Web3 Accra and others, even closer, he said, regulation will always have to exist. It doesn't matter whether you're trying to provide certain services with sticks and stones. Now, I don't suppose anybody in this room has more virtual crypto cred more than Vitalik Buterin, who created Ethereum. And he says, whether you're using sticks and stones, regulation plays a role because we need to be able to distinguish legitimate actors from illegitimate actors, support the safety of the sector and the economy, as opposed to create risk that destabilizes and destroys the economy, and protect consumers as opposed to subject them to risk. And not everyone in the creative space, whether it's fintechs or the rest, are actually looking or seeking to do something good. We have to recognize that they are bad actors. That's the part that we have to deal with as regulators. I wear both hats, innovation and regulation. And so there will be, if there's anyone who believes there will be a world where regulatory frameworks or regulators will have no comment in activities within their domain, that it will exist there is no such world. I am sorry it doesn't exist. It will not happen in the future, not just in Ghana, nowhere in the world. And so it's important that we recognize this and use it as a basis to engage. So regulation is reasonable, progressive, and adaptable. Those are the things we should be seeking to do. So sorry to burst your bubble, but this is the reality of society, and this is the reality of how you sustain, frankly, any kind of stable society. Thank you.
Thank you, Kwame. We see the passion of the regulator in the voice. Very good, very good. Michelle, please.
No, I have to concur with what the regulator has said. It's very important that we support the regulator and we abide by the rules. I've been in the crypto space since 2011, right? So those of you who are in the crypto space, we are in the rooms. We are in the rooms. But in order for us to be in the rooms as well, we have to come in and bring value. That's number one. That's my comment on that. And then it's very important that we understand the context as he's painted, right? So we cannot, even when I started my business, Global Policy House, which focuses on cryptocurrency, digital assets, stable coins, artificial intelligence, data, cybersecurity, the reason why I focus more towards creating a very strong legal foundation in my own firm is that I wanted to differentiate myself from some of the actors who are in the crypto space around that time. And we all know what has happened over the years in some of the crypto spaces. So I absolutely think that it is important we have regulation, but that regulation has to be balanced. And that regulation should not stop us from doing what we need to do. And one of the biggest problems we've had is that there's been very poor understanding, like I said from the very beginning, very, very poor understanding of what the crypto space has actually got to offer. Because most of it has all been, oh no, it's all about coins, right? And creating coins. No, the crypto industry, in fact, the digital asset industry as a whole, has a big role to play in critical areas for Africa, for example, food security, right? Payments. But we've not seen some of these use cases come in. So again, even on the regulator side, what they're seeing coming out of the crypto space might not necessarily be, something that they want to necessarily look at. But actually, we as an industry in the crypto space need to be better at, one, communicating what is it that we're doing and working with the regulators and the governments, right, to make them understand what it is that we're doing. So for me, it's important to actually educate, build capacity, and highlight what is it that we're doing. That's number one. And second, to answer the other question around the sovereignty, I 100% believe that if we are going to create an intra-African market, one single digital market, that the monetary conversation also has to be in par with that conversation. Hence why it's important, right, back to the gentleman's comment around global stablecoins and the impacts and the issues around global stablecoins. We can mitigate against those issues, like I said, by also creating African-backed stablecoins. And those stablecoins also should be able to help us improve our currencies, because most of our currencies are not necessarily strong. We have to understand what is the utility in the stablecoins. So Nigeria might not have had, I don't know what the case was in terms of the utility between what they had beforehand, but you have to know what your utility is and why are you even creating a stablecoin. Do you need a stablecoin? Do you need a CBDC? Do you need this? You need to understand first, right? And then you build something that is relevant for the marketplace. So the sovereignty for me is very important because they are creating monetary independence, which matches what it is that we're doing as a continent, right? Creating a single African market, but we're also creating new ways in order for us to implement payments, right? Enable payments to happen very seamlessly. I have staff in different markets across the world. I find it very hard sometimes to pay them, right? Because the payments mechanisms are not there in place yet. But if I do it through peer-to-peer crypto, I do it through, PayPal, I do it through so many different organizations, that helps me. So we need to create seamless cross-border payments. We need to allow data flows to happen, and we need to have, currency that works also for the African continent. Thank you.
Thank you, Michelle.
This is Big Brother. Mr. Moderator, you have 1 minute remaining.
Very good, very good.
They said it all already, so.
Just final words?
I think with respect to the regulation, as the lawyer that supports an ecosystem, so I am in the private sector, in the blockchain and crypto sector, I have the privilege of seeing builders in all parts of the world and those who are in countries where they have an open dialogue with their regulator, whether there are actual regulations in place or there's sandboxes or as long as there's an open dialogue, there is more innovation and there is more safety for the consumer. So I think that is the path.
Thank you very much. I think we heard for the great panel, regulation needs to balance innovation and creativity with risks, needs to ensure financial stability, protect consumers, reach in an inclusive manner remote areas, both geographically and in the social spectrum. And to do that, it needs to be designed in a collaborative way with interaction between the regulator and the private sector. So with that, let me thank the panelists for the fantastic panel, and thanks again to the organizers.
Mr. Luca Ricky, Kwame Opong, Michelle Sifunya, and Candice Kelly about a photo opportunity at the front. And while they're at that, I'm pleased to inform you that a lot more of the interaction will happen during lunch. The good news is that we'll all be in the same place at the Papillon on the 3rd floor. We shall be sharing coupons shortly, so please don't be in a hurry to leave. Additionally, at the end of this whole encounter, we shall invite the organizing team for the 3i Forum to please come up for a group photo. So what has been discussed so far in this panel has been Africa's regulatory frameworks and how it can responsibly adopt stable coins and digital assets by focusing on inclusion-driven policies, risk-aware regulation, and regional collaboration. And so all is set now for the last conversation. An investor outlook on Africa's fintech future, insights on what global investors look for in African fintech and what drives de-risks and scalable capital. Please make welcome the moderator, Madame Hannah Akwa, is the founder, TKC Capital. Is she here? Okay. We make welcome Mr. Jojo Okran, he's the head partnerships at SBC Afritech. We make welcome Trish Amwa Intim, principal at Verod. Hannah is replaced by Mr. Yao Apialate as moderator. Please welcome him warmly. Michelle, I believe you're needed back again. A round of applause for Michelle Sifunya. And so, Mr. Apialate, You have 30 minutes to deliberate and then 15 minutes to engage with the audience. Over to you.
Thank you very much, Jerry. Okay, so hi everyone. We know we are standing in between your lunch. Now that you've gotten your coupons, we are just thinking about food, right? So you're going to have a quick one. So my name is Yao Apialate. I'm a partner in Deloitte Ghana. I lead our financial advisory business. So just a few stats for your information before we start this conversation. So McKinsey reports that total investment in fintech in Africa is going to reach about $50 billion by 2028. This is a five-fold growth from currently $10 billion. In the last few years, post-COVID, fintech business in Africa have grown from 450 to about 1,200 as we speak. Venture capital investment in fintech has also increased significantly. So in the last year, venture capital investment in fintech has increased from what it used to be to what we currently have. So it's increased from 2.1 billion to now 2.6 billion. And so I'm asking yourself, the billions that I'm talking about, how much of it is coming to your business? And how do you assess these billions? So I've got a panel, well-resourced to help you have this conversation. So I know they've been introduced, but I'll give them an opportunity to talk about themselves, what they do, and then what excites them about fintech. We know there are challenges, but in the midst of the challenges are also prospects. So starting with Jojo, from immediate left.
Sure. My name is Jojo Okran. It's a pleasure to be here. Thank you once again to the Bank of Ghana for organizing this amazing summit. On my level, I lead partnerships across Africa for Startup Bootcamp. We are a Pan-African accelerator with 70 startups in our portfolio, valued at almost, we're approaching $1 billion. So what excites me about fintech is the opportunity for inclusion for billions around the continent, as well as the opportunity to create a new class of entrepreneurs, a new class of enabled businesses that are adjacent to the fintechs themselves, and to see that evolution lift the ecosystem as a whole.
Trish.
So my name is Trish Amwan Tim. I work with Verid Capital. Verid is an African-focused investment firm. We have a venture capital business headquartered in Nairobi and also with offices in Nigeria that invest in early stage, call it Series A, tech-enabled businesses. And on the private equity side where we sit, we have offices in Nigeria, in Cote d'Ivoire, in Ghana, which is the office that I run. And we invest in businesses for growth, for impact, and then for returns. Now to your question, what excites us about the financial sector of fintech? We're sector-agnostic investors, but we do have areas of interest. And fintech particularly is one area of interest because of the potential for impact, for scale, and for financial inclusion. So for us, we're very driven by two main things. One, obviously, returns to our investors, but two, also being able to make an impact on the continent and in the markets in which we operate. And we see fintech as a means to very quickly bring about financial inclusion, to bring about economic growth, and to really just drive the economies of the various markets that we're in and that we're supporting them in. And the ability for them to expand very quickly within their countries and even cross borders as well, we think is very interesting. And that's why we like to back fintech businesses.
Thank you. Michelle.
Yeah, I won't focus too much on introduction, but Michelle Chivunga, in terms of Global Policy House, which is a firm that I represent, we cover quite a lot around emerging tech, as I've said earlier on. But we also have a new side to the business as well, which is more new, which is very much around investments. So we're creating our own fund to support especially women-led businesses on the continent. So we're quite excited about that. And you know, what excites me about fintech, I think having been in this space myself for quite some time, I've seen the growth. I've seen, the problems that are being solved by fintechs. These are real issues that we've been facing, not just in Africa, across the world. So when they're dealing with sorting out payments or they are creating new agri-solutions, fintechs are right at the heart. And I think one thing that we can do is actually to try and support the fintech a lot more. Fintechs have access to solutions. The traditional ecosystems, whether it's the banks or, that have been there longer than fintechs, also have access to market, have access to customers. So I think when you bridge the two, you start to really create some transformational change. And so for me, what excites me about fintechs is that they are playing a very critical role to help with developing economies. They're playing a critical role with bringing solutions to things that we have not been able sometimes to solve. But we do need to open the doors up a bit more so that we connect the fintechs and we connect the traditional world as well.
Okay, so staying with you, Michelle. So I mentioned earlier that fintech business in Africa is expected to reach $50 billion approximately by 2028. Now, in terms of scalability, currently we are looking at investment of about $1 billion. So for us to reach 50 times, how do we help these fintech businesses scale, given the cross-border issues, the regulatory issues? Just how do we help these
To
fintech?
be honest, I think we're going to do that because we are now creating environments where it's easier for the fintechs to do business. So the rules are becoming clearer. Our countries are starting to talk to each other and say, hey, fintech X wants to grow from Kenya to Mozambique. Those rules need to be clear for that fintech to be able to do that, to grow, right? A fintech from Nigeria wants to go and do crypto in Tanzania. Sometimes we don't have the rules, right? So that fintech is not sure whether they're going to be able to comply. So in order for us to allow them to get them to scale, it is important, like I said, create the right environment for them, help them in terms of also training and capacity building, because even the fintech also need to understand, how do I operate in a new market? How do I deal with a new regulator? How do I, enter markets? Access to market is very important. So making it easier for them to get into new markets so that they can scale is important. Elevating their products, right? Enhancing their product. You might have somebody creating shea butter and she wants to export to a different market, but what's the packaging looking like? Can we improve the packaging? Logistics, how can we get from one product to the other? That's one area where my firm, our fund, wants to actually invest more in logistics, because we need logistics to be able to move. And then also, of course, things like access to payments and easy payments, access to more investment is important. And where we're going to get extra money, it might not be necessarily from external markets. We have to build the capital markets here to support them.
Yeah, so all these issues about visas, fintech business do not need visas, right? So you can expand to all the other countries, provided you are doing legitimate business. So I'll come to Trish. So Trish, as an investor yourself, so what are some of the key considerations that you have with growing emphasis on sustainable finance? How are ESG considerations reshaping investment criteria for Africa fintech businesses? And what specific approach should founders of these businesses prioritize in order to secure some of these sustainable finance sources?
Okay, so that's two very loaded questions in one.
So can just take the first one.
Okay, so let's start with the first, which is what are the ESG considerations and how are they sort of shaping our investment criteria and the way we look at fintech businesses that we want to invest in. I think in a very large way, ESG is making us take even more interest in fintech. Not least of all because, if you're going back to your SDGs, financial inclusion, which clearly fintech helps to promote, underpins at least 7 of the 17 SDGs, right? If you're talking about reduction of poverty, if you're talking about, sort of access to healthcare, if you're talking about better gender equality, all of those sorts of things, those in a big and very real way are influenced by financial inclusion. And coming back to this point of why is fintech interesting? I don't think that you can find a single industry that isn't touched by finance in some way, shape, or form. It's the nexus of, and literally the bedrock of all of the different industries that you're investing in, all of the entire economy, right? And so when we're looking at it and we're saying, how can we effectively help to support and invest in and grow this foundation on which all other businesses involved, all other businesses rely on, what are we looking at? We're looking at things like, from the first point, social impact. To what extent are they able to increase inclusion? To what extent are they able to make a positive social impact? To what extent are they able to bring in people into sort of finance, right? I was looking at some stats the other day. I think they were speaking about 43% of people in sub-Saharan Africa have a formal bank account. I think in Ghana the figure is closer to 39%. As opposed to 73% of people who have mobile money accounts. That gives them financial inclusion. That gives them access to capital. And then you're able to layer on all these other products, whether it's microinsurance, whether it's health insurance, whether it's all of some of these other things that they previously would not have had access to before. So that's one thing that we're looking at. What is real impact and what's measurable, and how are we able to support them to provide more of that sort of impact. The second thing that we're also looking at is, on the flip side of that, risk management. How are they managing risks? Are they walking hand in hand with the regulators? And I know in one sense it's a bit tongue-in-cheek, right? But the reality of the matter is you do need your regulators, and you do need to walk hand in hand with them. Innovators and entrepreneurs will always be a step ahead, sometimes 2 steps ahead. But when you're able to partner with your regulator and have them see where you're going, more often than not, we're finding that they themselves are excited, because at the end of the day, their goals in terms of financial inclusion and bringing more people into, whether it's the formal, what we call the formal financial sector or not, but having people under that umbrella with access to finance, that is their goal as well. So just, again, making sure that there's proper risk management, you're walking hand in hand with your regulator. You're also paying attention to things like, data integrity and data security. So those things we also take very, very seriously. And I think the final point, and again, like I said, it's very loaded because there's a whole list of things that we're looking at on the ESG side of things. But something also that we think is very important is, again, the ability for businesses to be, and maybe I'm shifting a little bit into the financial side of things as well, but to be able to show profitability or a path to profitability. Now, it's very important, as we're talking about sustainable finance, that the businesses themselves are sustainable, that they're not here today and gone tomorrow. Because having businesses that are only around, they blitzscale, they're in the news, and then next week they've disappeared, that is reputational risk. That makes people lose confidence in that. So again, making sure that the businesses are stable, they're here for the long term, they're here to serve for the long term, is also a really important consideration for us. I'll leave it there for now.
Yeah, so maybe, Trish, just a follow-up on that. I mean, I sat on a panel with one of the development finance institutions. The guy listed a whole list of things they look out for under ESG consideration. Same thing with private equity. Are these small and medium-sized businesses able to meet the criteria? Like, let's see some of the ESG considerations. You know businesses that have met them, you know others that are struggling to meet them. What are some of the things that they can do to easily meet some of these requirements?
And actually, that's a really good point that you're raising, because our expectation is not that every business will be perfect on ESG and all of these metrics on day one. But what is important is that there is the desire to get to best in class. There is a desire to get to what the targets should be, and that you're willing to work with the investor to get to that point. So a lot of times what we'll do is we'll have that initial assessment to understand where the business is today, and then sit down and co-create with the founders, with the sponsors, what that path will look like, whether it's a value creation plan or call it an ESAP, whatever you want to call it, and make sure that there are regular check-ins, that there are milestones, that there's actually an achievable plan that we can walk together to reach those goals.
Thank you. So we go to Jojo. I know you've been in fintech business for some time now. So if you look at all those who are operating in the sector, what are the subsectors in fintech that's attracting the most investment? And in this era of shrinking global financing, we know a lot of these financing, some countries are now increasing their defense budget and then cutting global aid. So what can this business do to attract more investment? So what are subsectors that are doing so well in the fintech space?
So maybe I will take your macro point first, and then we'll come to the micro. You mentioned kind of the shrinking finance space, and it's interesting because for the last 3 years, all we've heard is funding winter, funding winter, funding winter. And it's real. The numbers reflect it. But the truth is that numbers and narratives, those two ends, they move markets. So the numbers have reflected that in the past, but it's really critical that as the numbers are shifting, that we as leaders in the space, we're keeping up. If you look at a 12-month moving average, which was a really great study done by the Big Deal Data Center, you look at 2019 and 20, we had about $1.4 billion raised across Africa's VC ecosystem, tech ecosystem overall, a period of stability. Then we had a period of hyper growth, 450% growth in just 2 years. And we all got excited. We all thought, you know, this is going to be the way of the world. But the reality was, it was unsustainable. And then we went into the abyss, 50% decline in the next couple of years. The last 2 years is what we've experienced. But we need to make sure that we are not stuck in decline. And the truth is, right now, the data, the numbers are telling a different story, and we have to pay attention. From 2024 March to 2025 March, we've actually had a period where, on average, there are $2.2 billion flowing into Africa's VC ecosystem. So while that's not necessarily as crazy as the boom period, it's still 60% higher than what we had before the boom. So it tells us something. It tells us that Africa did not just survive the funding winter, but we became more resilient. We grew, and we really matured. So I think it's time to start telling a different story, a story of an Africa that is growing sustainably. And within that, if we're looking at the fintech space, I'd say there are 3 really interesting trends to note. The first one being the combination of lending and payments. Those are almost the foundation of our fintech industry as a continent. You have about 70% of all funding that goes into fintech going into those 2 spaces. Then the second thing you'll see is a real focus on embedded finance in specific verticals. So you'll see a company like Move that is a fintech, but it's very embedded within mobility. And then the third trend is one that hasn't fully expressed itself yet, but I would bet my bottom dollar that in the next year, we're going to see so much more of it. And it's a pretty obvious one. It's AI. But if you're looking at the global level, you have literally 80% growth in funding going into AI to drive it up to about 30% of all funding globally. But in Africa, we're not seeing that just yet. But I bet you we will.
So should I stop the fintech business I'm doing and start AI?
Not necessarily. At the end of the day, AI is an enabler, right? So you have AI that is able to adapt across different verticals, across different, basically, need areas within business. So yes, you can have your fintech, but it can be AI-driven. You can have your agri-tech, but it's AI-driven. So it's a wave that I'm really excited to see come to bear across the continent.
Okay, thank you. So the last one, Michelle, we come to you before we go to the audience. So liquidity issues you've mentioned are some of the challenges for these fintech businesses. So how can we help these fintech businesses address liquidity issues, particularly with what you are doing with Euro Exim Bank? Just help us to understand.
Yeah, no, thank you. So Euro Exim Bank, is a very big bank, and we've partnered actually with Euro Exim Bank. So there's 2 sides. You've got a traditional bank that covers, provides access to infrastructure financing. They do SBLC, letters of credit, trade finance. And we decided to actually come together and partner because for us, we're looking at the other side, new assets, digital assets, right? Crypto, stable coins, digital currency. And why did we decide to have that partnership? Because like I said earlier on, we're no longer in a world where we're just going to be looking at traditional capital, no. The world is definitely evolving and you see more and more partnerships come to form, because we are addressing different issues now. And in order to address those issues, sometimes the traditional mechanisms might not be in place. For example, I was an ex-banker myself. It was very difficult for us to justify certain investments into, for example, smaller businesses. It cost us more to fund them when we were in banking, but actually if we had a fintech solution, then that can help, right? So I think when you have the two combination where you're coming together to partner, to address specific situations, you can actually benefit quite well. And so for me, I feel like we can start to address the liquidity issues by partnering. We've talked about partnerships a lot. We need to partner. You can provide something, I can provide something that maybe you can't. And when you come to partner, then you're also able to tackle and address a lot more of the challenges and solutions. Finally, also just going back on the point around AI, I actually think as a continent, we can no longer just come up with solutions around payments. So all the fintechs in the room, great, yes, we are addressing payments, but I think we need to diversify in terms of the solutions we're bringing to the table, right? Because we have a lot of issues that we need to address, especially around things like we want to industrialize, which means we need more manufacturing, we need more processing, we need more healthcare, African healthcare. So can we solve those solutions as well by leveraging things like AI? And for me, it's not so much about one technology. We tend to have this habit where we come in, oh, today AI is really sexy. Tomorrow, no, blockchain is very sexy. Oh, today is this and that. Actually, the power comes in when you're actually converging technologies and starting to create new solutions. So co-creation by leveraging core technologies is very important. I think that's what we're going to start to see happen in Africa. AI, yes, will play a big role. AI is very important, and we're going to see more investment in AI. But I think in Africa, because of the issues we have, we need to basically converge and look at convergence of different technologies to address our problems. And it's very exciting. And finally, in terms of how do we solve the liquidity issues, I'm back to my point earlier on that we need to invest in growing our capital markets. I have said this to our leaders already last week. I know sometimes it's, we're pushing quite hard, but I think it's important that if we create our own capital markets and invest in building those capital markets, then you're going to start to see growth. Then you're going to start to see our entrepreneurs actually being funded properly. And the sustainability he talked about, we want that sustainability to continue to happen, and we're not stopping and waiting. Today we have money, tomorrow we don't. We need to have the consistency in financing for our businesses.
Thank you very much. Yesterday, a few weeks ago, I was also at a forum where we came with a conclusion, or to the conclusion that there's about $1 trillion sitting in pension funds across Africa. And these funds need to be deployed. And fintech should be one of the areas they should be deploying these funds to. But because we do not have adequate capital markets and adequate processes for financing business, these funds are just sitting down, doing nothing to say. Jojo, have a quick one before you go to the audience. Or you.
Sure. So, Michelle, you had mentioned kind of the element of partnerships, and it's so important because one of the things we work on a lot with our founders is almost, I call it the 3P partnership framework. We're looking at developing a robust circle of partnerships to help our fintechs grow. And really, they should be looking at peers, platforms, and policy, where on peers, you're looking at collaborations between startups. So a really good example, for instance, is one of our portfolio companies, Kuda, that has partnered recently with Seabit to enable transactions without using a credit card. And then you have platforms where a really great local example is Grow4Me, that has partnered with MTN to use their Momo rails and also to give them access to MTN's large customer base. And then finally, you have the final bit, which is really policy, right? A lot of times when we have startups, they're afraid to go to the government, they're afraid to go to the regulators, but there are amazing things that get unlocked when you put the two together. Because if you look at South Africa, for instance, you had TimeBank, which was struggling to find its way initially until it became one of the providers for South Africa's government-to-person payment scheme. And through that partnership alone, in the first year, they were able to unlock 1.2 million new users on their platform. So the real opportunities exist when we focus on partnerships in a holistic manner that allow us to address peers, that allow us to address platforms, and allow us to finish with policy.
Thank you very much. So Jerry is at the podium, so it's more like get ready to stop work. I'll give opportunity to one or two people, just a quick one from the audience. And in the absence of that, I'll just have the panelists have their... Someone has got a question? Yes? Okay, good. Go ahead.
Thank you. As we proceed in this section, innovating, finding opportunities in terms of investment and the impact that comes, issues around liquidity. Sometimes we sit in the room, who are then the stakeholders in this room? If it is all driven by fintech representation, the extent to which the private sector, who are the private sector actors in here? Again, a critical element in this conversation in this room. Do we have representation from the public sector, the government? Because as you sit over there, fintech, commercial bank, at the end of the day, who do you run to? I don't want to talk to the Minister of Finance. You having a budget size, if I should put my cap on as a former Minister of Finance, that you have almost 40 to 50% of the budget is on wage. You're paying civil servants. You're looking for that critical element around which you are leveraging liquidity in the system. Is it that we don't have adequacy of liquidity in the system, or is it all around management and the utilization and the extent to which we coordinate? So coordination is key. You talk about pension fund, significant amount of dollars sitting somewhere unutilized, yet we struggle in terms of infrastructure. What's happening? What's happening in here? And I will just end on this note by saying, one of the newest innovations that has happened in West Africa, if you go back and ask the Gambia currently, in terms of its engagement with the government, and that of the Afreximbank, I'm just taking it at some higher level. Financing infrastructure without recourse to the IMF, World Bank in terms of the old order. Domestic resource mobilization from within is now financing rural infrastructure. In the Gambia, what you see from the airport to Senegambia throughout overhead bridges, now the new development is such that a key element within government, as in the Rural Fund Authority, becomes the issuer of an instrument, a bond issued in domestic currency. Afreximbank comes in, buys the bond, but has to refer to the Central Bank of the Gambia for a swap. The swap is done in the tune of, say, 50 million as the first course of financing, and that without an balance sheet effect on the Central Bank of the Gambia, and also no new debt acquired to the government. I just thought to say, let's innovate for greater impact. I thank you.
Thank you very much. So let's innovate for greater impact. I guess we are done. Or you have closing comments. So 30 seconds each. So Michelle, 30 seconds. Quick one.
We are ready to innovate.
Excellent. Trish?
No, I just want to say that certainly on the private equity side, we need to invest the money, right? For us, we get given money to invest. We have a 5-year horizon. It's pretty much use it or lose it. And in that time, we are hungry for interesting businesses that can grow and that can scale. That's all our job is, to find industry leaders or businesses that can become industry leaders. But you do absolutely need to pay attention to making sure that you have profitability, or at least a path to profitability, and that you're able to sit down with your investors to chart out what that is and to really capture the market. But we have capital to invest, and we need to invest.
Excellent. Jojo?
I think I would close with two things. One is partnerships and making them holistic with the 3 Ps. And the second thing is it's time to tell a new story.
Thank you very much. So those of you in this room, there are funds looking for investments, and those who have the money, there are investee companies looking for funds. Find each other. Thank you very much.
Thank you very much, Mr. Yawapia Latte and his amazing panel. How about a group photo? It's time to tell a new story, to chart a way forward, right here at the 3i Africa Policy Forum. Who better to take us on that journey than Papa Akhurst? He's the convener of Tech Connect. He will give us key takeaways, appreciate our speakers, and what is next for the coming summit. Ladies and gentlemen, Papa Akhurst.
It is dangerous to stand between a man or a woman and her lunch. So let me just make this snappy so we can move on. Good afternoon, distinguished guests, policymakers, innovators, and partners from across the continent and beyond. Can we agree that today has been a very remarkable day? Please, let's give all the speakers a round of applause. We've explored what it means to build a truly connected Africa, not just an idea, but in infrastructure, regulation, innovation, and most importantly, in intent. We began this morning with a powerful reminder that Africa's moment is now, and it belongs to those who are willing to act in concert, not in silos, to build a financial future rooted in inclusion, trust, and resilience, leveraging on co-creation and collaboration. So where do we go from here? Now, I like Kwame's comments on numbers and narrative and what the spoken word artist said about us all being the co-authors of what is to come. I also like the conversation around utility, and the importance of balanced risk